Hey, what is up, everybody? Imri here with Market Edge AI. Super excited to be here. I am still a little bit under the weather, so if you hear it in my voice, please forgive me. Hopefully, I won't have to take any stops or breaks to blow my nose, but we're moving. We're moving. So, it's been a fairly quiet overnight session here in US equity index markets, which is the main market that I watch, but we're going to do a complete market breakdown using the market terminal. And this is exactly where fundamentals meet technicals, and we're going to get ourselves ready for a phenomenal trading day. For those of you that don't know a lot about me, my name is Imri. I've been a professional, meaning institutional trader now for over a decade plus. I've experienced trading on a real money prop desk as well as on the hedge fund side of the industry, having worked hand in hand with one of the most legendary macro traders of all time, Andy Krieger. So really excited to be here, and I'm here to give you my perspective on the markets in line with what our terminal here at Market Edge AI is able to do. Now, we've got some incredibly exciting updates with our terminal, and we have just now launched our Ask Market AI engine. This is the future of prompting, especially for traders. It is unlike anything else out there. So for those of you who have ever used Gemini, ChatGPT, Claude for your trading, you have not seen anything yet. Okay, so kicking things off with my process, the first thing that I like to do as I come to my trading desk is to start taking a look at what is going on in terms of overnight news. So we're going to take a look here at the news feed on the right-hand side, and on the terminal, I can actually open a dedicated news feed here as well, if that's easier. Now, I like to filter the news feed first by taking a look at what is high impact. So if I just scroll back to what's been relevant overnight, we really have just the one super high impact headline here, just that the Pentagon holds an urgent meeting on arms shortages following Trump's critical call. Now, although this is a high impact headline, I don't think it's something that's necessarily going to be market moving today. While this is an important headline, it's not part of the narrative that the market is currently pricing in. We're far more concerned with actual escalation signals in the Middle East, but it seems now like both parties are back at the negotiating table. And as far as economic data goes, all eyes are on any kind of data that suggests that inflation could be ticking back up. So the next type of news that I like to filter is going to be breaking news. So it's going to be slightly under high impact, but there will be more headlines. So you can see here, we've just had a couple headlines come out over the last few minutes. Temporary Hormuz corridor to remain. So that's a huge sign for risk on assets. So we can see that's good for gold. Can see that's going to be bearish for oil, which is exactly what we would expect here. Iran warns Gulf states, tell Trump to desist or we hit you hard. Okay, I mean, that's breaking news in the sense of the headline being new, but that's obviously been Iran's position for quite some time. I think the bottom line here is that the parties are back to the table, talking it out, and of course, both sides will also remain tough when they're talking to the media. That is obviously going to be something we want to take into consideration as we now head over to the economic calendar. Now, the economic calendar is what I consider to be the day's landmines or opportunities, and this depends entirely on your personal approach to trading. Now, at Market, our longstanding belief, and we've run quite a few webinars ourselves here in terms of what exactly we want to do when it comes to trading news events. And our stance has always been, you do not trade the actual news event. You wait for the dust to settle down. And once the dust has settled down, that's where the real opportunity tends to lie. So what we want to see here is keeping an eye on high impact news events for the day. The ones that we're going to be dealing with this morning will be the initial jobless claims, and then slightly lesser importance will be productivity, continuing jobless claims, and unit labor costs preliminary. Now, what we want to be keeping an eye on, especially with that initial jobless claims report, is the actual result relative to the forecasted results. So here we see a forecasted result of 202,000, but what we see here is our proprietary min-max range. And this is something that you will just simply not find anywhere else, okay? And this min-max range is going to be so important for anyone looking to trade this news event. So how does the min-max range work? Well, I'm going to open up by clicking the sparkly AI icon here, what the min-max range looks like and what our playbook for this news event is going to be. So if the data release comes in forecast, that's likely going to result in a ranging market for the US dollar. And if it comes in above forecast, that's going to be bearish for the dollar. And if it comes in below forecast, it's going to be bullish for the dollar. Now, if you wanted to trade another asset, we can obviously click on where it says USD here and pick another asset instead. So if you wanted to trade the NASDAQ, we could click on NQ here. We can see that above that reading, it would be very bullish for the NASDAQ. So higher jobless claims suggest less inflationary pressure, more accommodative policy perhaps from the Fed to help support the labor market. And if we have less jobless claims than expected, that could potentially be a bearish event for the market as well. Okay, so if we wanted to take a look at gold, we can type in XAU USD, and we can see the same thing here, how those readings will mirror what we were just looking at in the NASDAQ. So that's what we've got coming up as far as news events go. The next major thing that I want to do is now I personally like to take a look at major economy readings. Now, I don't expect these to change overnight, but for the sake of us being together on the stream, this is something we're going to be taking a look at. And the major story has been inflation kind of hitting a peak here at 4.2% and now curling a little bit lower. Now, the reason that's been such an important fundamental story is because now, as I'm going to go to one of my other favorite pages on the market terminal, which is the interest rate tracker, we're going to see how the Fed's rate expectations have started to change dramatically. Now we have back to a coin flip, basically, in terms of whether or not the Fed is going to be hiking rates in September. Before, it was basically a given that the Fed was going to hike rates in September, and now it's a lot more of a question mark. We can see that the odds still favor an increase versus a decrease, but those odds have been coming down recently. So any new economic data that basically supports inflation coming back down is going to be very bullish for risk on assets, as that's going to start the market considering that maybe the Fed doesn't have to hike rates after all, and that all of the inflationary concerns from this war in the Middle East have been overstated and overblown. Right? That's kind of what the market is looking at, and that is the dominant narrative driving the market today. So now we can go to our brand new feature, Ask Market. There's nothing like this before, and I've already preloaded a prompt here, which is run my morning brief for the S&P, for gold, and for NASDAQ, for each today's sentiment with key levels and what changed overnight, and with the single most important thing to watch today. It's just such a fantastic prompt to be able to run. And it's amazing because what it's really going to do is it's going to allow you to get ready for the day without needing to worry about all the complications surrounding what fundamental analysis can actually look like, right? So this is super cool, super important in terms of understanding what we want to be looking at, what we want to be paying attention to for the day for each of these markets. So for ES, we can see that S&P futures have stayed firm as the Hormuz deal progresses. Yesterday, we had a bit of a sell-off, which frankly, after 2 outstanding days of price action, is the least that we could expect. So the scenario here, taking a look at the price chart, is still bullish overall. We do have a lower support zone coming in, roughly 76.80 to 76.60, but we're making a nice tight base here in the overnight trade. And we're going to dive a lot deeper into technicals. I'm going to show you my approach to how I like to look at charts and break them down from a top-down perspective. But for now, we're seeing that the day trading bias for the S&P is bullish. However, what we want to keep an eye out for is this overnight shift. So we did have some comments from the Fed chair Kevin Warsh, who is holding a hawkish line despite market criticisms. It hasn't cracked the bullish bias yet. And whenever we have a new Fed chair coming in, the market's going to want to kind of test him. They're going to want to see if this guy's for real. Is he all talk? Is he all bluster and bluff? Or is he a pretty straight shooter? Now, Warsh does have a previous reputation for being a straight shooter, okay? So this is something that we're going to want to keep an eye on to see whether the market is going to call that Kevin Warsh bluff or not. Hey, thank you. Good morning to you guys as well. I'm so happy that you found my Chart Academy Masterclass helpful. We super appreciate that. I wanted to do something different with that. So if you haven't seen it yet, please, please check it out. But yeah, thanks for the support. Thanks for the love. Next up, we've got gold. So gold, the day trading bias here is bullish as well, mirroring what we're seeing in the S&P 500. There isn't anything really different here in terms of sentiment, but if we wanted to click here on what would flip that sentiment, we can see that high US real yields could potentially cap upside, hawkish Fed commentary can support tighter Fed policy. So basically everything here that we've been talking about on gold would also apply to ES, and obviously it's going to apply to NQ as well. We're keeping an eye on inflationary data. We're going to keep an eye on how US yields are moving, and I'm going to drop a little bit of insight in terms of why yields are important to investors and traders as well. NQ had a little bit more of a directional decline relative to ES, so we're going to walk through on the price chart what that could possibly mean as far as performance for either of the indices moving forwards. Now, I love this prompt because we're also going to get breaking news here. So the major one, Kevin Warsh to maintain Fed stance despite market criticism. We got some news out of the UK, a little bit out of India, not going to be as relevant for us as we're gearing up for this US session coming up now. So then more headlines, and then there are going to be some follow-up prompts here that are going to be really important for us to potentially click on and expand on. So if you're interested in expanding your market knowledge, you could say, show me Warsh's full comments on Fed policy today. But I think the most important one for us, depending on what we're trading, is going to be which tech earnings are scheduled this week. But even more relevant today is what's the market reaction if these Hormuz talks start to fail. And again, for those of you just tuning in, apologies. I do have a little bit of a cold here that I'm still trying to kick, but hey, we're moving. We're making the most of it. Okay, so if Hormuz talks collapse, the market unwinds the massive de-escalation premium. In other words, that big rally that we've seen so far that's been supporting equities and pressuring oil over the past 3 days. So now we get a scenario map, and this is for oil leaning bearish here, of course, and we're going to get some further commentary breaking down the S&P 500, the NASDAQ, and the gold. But I think here it's pretty common sense. If these talks really do start to break down in a big way, we're going to see oil start to surge. We're going to see risk assets start to pull back. Fairly common sense stuff, right? Now, the final thing that I wanted us to take a look at, we're going to pop over to the charts now for a second. And as we pop over to the charts, what I wanted to keep an eye on is going to be yields. All right, now if we take a look at long-term yields, such as the 30-year, we can see that yields have been, I'll even go to a monthly chart to make this even more dramatic. We can see that yields have been trying to break out. We've had some long-standing tops here, and in the month of July, we finally broke out. And you can see we're coming back to retest that lower boundary line there, and potentially long-term yields can start to move higher if we hold above roughly 5.13% or so. Now, yields move inversely to bonds. So as yields are breaking up, we can see the 10-year yield here moving higher. We can even see short-term yields also moving higher. Yields will move inversely to bonds. So if I pull up TLT, which is like a bond ETF, we can see that this ETF is sitting at historic lows. So as yields move up, as interest rates move up, bonds will come down. Now, interest rates are set by the Fed to an extent, for sure. That everybody knows that, I think. But one thing that's very important to keep in mind here, okay, is that the market as a whole kind of decides what America's interest rate payments on its debt is. And that is by looking at yields. So the broad market trades bonds. It's an open market. Anyone can trade bonds. Because anyone can trade bonds, that means that the market as a whole collectively sets where the yield is. And what the Fed historically does is it follows what the market has said America's interest rate should be. So to a point, the Fed is completely independent. But if you look at history, there is not just a strong, there's an exceptionally strong correlation between how yields move and how Fed policy tends to follow. So this is why the market has been talking about yields recently. I do expect yields to moderate in the short term, but here's the crazy thing. A lot of people think that the correlation between stocks and yields is that stocks go up and yields will come down, and that means the Fed is accommodating the market by lowering interest rates, by increasing the amount of money it's printing, making more dollars available to everybody. The mechanism behind why people consider this to be historically bullish for the markets is quite simple. When interest rates are lower, it allows those huge tech companies, those huge AI companies to borrow money at increasingly cheaper rates, which does what? That is good for their profit margin. And when they have access to cheaper capital, they can borrow more capital. That means they can reinvest that capital into things like AI data centers. They can reinvest into research and development. They can expand their workforce. In other words, those mega companies borrowing money at cheaper rates is presumed to have good positive knock-on effects for the rest of the economy. And the end result of that is ultimately that it's going to be inflationary. Now, inflationary does not necessarily mean a bad thing depending on who you are in the world. And this is something that I shared on my X fairly recently. I said inflation is widely considered to be a tax on the poor. Why is that? The reason the reason that inflation is considered a tax on the poor is because most people are asset poor and they hold mostly cash, right? And not a lot of cash at that. And if the Fed, the central bank, is printing dollar after dollar after dollar, currency unit after currency unit, what does that do? As the supply of currency increases, the value of that currency decreases. So what wealthy people do is that they borrow money at historically cheap rates, and then they reinvest that into other assets. And those assets go up in value while the cash comes down in value. Okay, so I hope that helps. I hope that that little lesson there makes some sense for you guys. And again, I think this is important stuff that you need to know. It doesn't necessarily mean that it's going to help you place a trade today. I understand that, okay? But still, this is important stuff that's going to allow you to think beyond just a day trader and what are you going to do with all the money that you make from trading and investing. Hopefully you're going to be wise with it and reinvest it into other assets. Not go out and buy that depreciating car. Okay, so let's get back now here to the charts, and I'm going to start my technical breakdown for you guys, and we're going to start things off with gold. So we have the larger fundamental picture. Okay, we've gone over that. The larger fundamental picture, I think, is pretty straightforward. So long as these talks seem to be progressing well, so long as inflation seems to be coming down, we have reason here to look for risk assets to continue moving up in value. Yeah, Marco, the GOAT, GT3 appreciates though. Here's the reality. There are many Ferrari models that have been going up 14% year over year. So in many aspects, if you put your money into a supercar that goes up 14%, what has the S&P 500 gone up last year? Let's take a look at that. And I'm sure we can ask market actually. Let me ask market. How much did the S&P 500 go up in 2025? And I'll bet you that a Ferrari or GT3 actually beat the market last year. Okay, we don't necessarily have full, yes, pull from the web. Let's take a look. I'm curious. And of course, we can also find that through TradingView as well. But let's see what we get for total return performance. Now I'm not advocating, to be clear, to go out and buy a supercar. So roughly 15 to 18% total return with dividends. All right, fair enough. Okay, last year we did have a crazy year as we recovered from, from tariffs. That's fine. So maybe you would have broken even relative to market returns if you bought the Ferrari. Fine, but I guess you could have driven the Ferrari. So my point is that there are assets, and these are called alternatives. Supercars are an alternative asset. Certain wines, whiskeys could be considered an alternative asset. Pokemon cards are considered an alternative asset. And there is a real argument to be made for putting a small part of your risk investable capital into alternatives. For example, like I do invest in a lot of wine overseas. I invest in a lot of whiskey in Scotland. Like I've got literally casks of whiskey that I own the paper to. And part of that is just diversification. In a risk-on market, I would expect luxury goods to appreciate at a premium. The only downside is how liquid are those markets. If I've got Apple stock, Google stock, Tesla stock, I can liquidate that stock very, very quickly, right? I can realize a profit very quickly. In a very bullish market, I'm sure I could liquidate a supercar extremely quickly. But if the market starts to turn, it's going to be harder for me to dump that asset. And I have to say, I keep a close eye on these things actually. G-Wagons, which have historically been bulletproof, are now seeing a little bit of softness. So you don't want to go into the supercar market thinking that just because it's gone up all the time, that it has to keep going up. 992 911s have been the worst performing generation for quite some time, actually. So just some super autistic in car knowledge on my part, but it is a market that I keep an eye on. But yeah, and anyway, let's get into markets. Let's get into markets, guys. Okay. My approach to technical analysis involves heavily around first determining what I call the macro regime. So we've gone over that. Part of the macro regime is taking a look at fundamentals. The second part of looking at the macro regime is a process that I call one-time framing, right? Now, one-time framing comes from auction market theory, Jim Dalton, decades and decades ago. The classic technical interpretation of one-time framing is so long as we're making higher highs or higher lows on your time frame of choice, that tells you that either buyers are in control or sellers are in control. I have a more strict definition of one-time framing that I've personally adopted. And for me, the definition of one-time framing is when on your time frame of choice, the market is making a higher high, but also a higher close and a higher low. So we can see here from August to September of 2025, we have a higher high, higher close, and a higher low, which means we're one time framing up. And you can see here, we one time framed up from September to October. But then in November, we had an inside month. That doesn't mean that sellers are in control, but it means that we're not in as bullish an environment as before. This is considered balance. But then from December to November, we did what? We one time framed up again, signaling that buyers are back in control. And then we had this huge, crazy month in January. We had an inside month in February. We had an inside month in March. Notice how we didn't make a close. So here we are still in a balanced state. But what started to happen in May relative to April? We started to one time frame down where we made a lower high, a lower low, and a lower close. This was the first shift to me from a technical standpoint that sellers were in control. And then look what happened in June. Big month down, big bearish price bar, continuing one time framing down. But look at what's happening so far in August. Now the month has just started, so the monthly time frame, is still very, very fresh. So if we discount the start to August and we just focus on July, we can say that July is what? July has been neutral. So on the monthly time frame, I like to say that we are neutral, potential balance. Now I like to go to the weekly time frame. Now on the weekly time frame, we can see that this week so far, we are one time framing up. But again, we're at the start of the week. If we look at the previous week, we see what? We also have balance. Okay, so now so far, the monthly and the weekly time frames are both suggesting that we're in a balanced regime. Now, finally, I want to go to the daily time frame, and it's on the daily time frame that things have started to shift. You can see that yesterday was such a huge day, and now we are one time framing up. So on the higher time frames, to me, what this means is that we want to be looking to see whether or not we can continue one time framing up. I want to prioritize from a technical standpoint. Oh, and I'll also add a note on the fundamentals here. So long as Hormuz talks continue productively and inflationary data trends down. Okay, and I know we've got that news event in 5 minutes, so we'll keep an eye on that as well, right? So the fundamentals are supportive of risk assets so long as Hormuz talks continue productively and inflationary data trends down, okay? What we have on the higher time frames is a neutral technical regime, and on the daily time frame, we're starting to one time frame up. So the signs are there on the shorter term time frames on a relative basis that we are starting to look for a bullish regime. Now, the reason regime is so important to me is because based on the regime we're in, there are different types of trades I want to take. In balance, I want to fade the extremes of the range. In one time framing up, one time framing down, aka imbalanced regimes, I want to trade breakouts and continuation pullbacks. Okay, so for those of you who have watched any of my content, Words of Wisdom, Chart Fanatics, Chart Fanatics is coming out soon, I hope, but Chart Academy, I talk so much about the importance of regime. And regime, where a lot of traders skip in their preparation for the session, is regime analysis. So I already know ahead of time what types of trades are going to work best in which type of market regime. Okay, so what we can see here is we are one time framing up on the daily. So what I want to be keeping an eye on are the day's highs and lows, the previous day's highs and lows, and seeing how today we trade relative to that day's range. Okay, now we've got that news coming out in 3 minutes. We're going to flip back to market and take a look at what the economic calendar is going to say about that news event. But what we see here is on the shorter term timeframes, as a day trader, I can be cautiously bullish on gold, but I need to be very, very careful because the higher timeframes are still in balance. Now, what happens if the weekly shifts to one time framing up? Now I can start getting bullish with even more conviction. The strongest market environment is when all three of those higher time frames, monthly, weeklies, dailies, are in alignment. When that happens, my conviction is super high, and I'm going to be sizing my trades a lot more aggressively, because what that tells me is that I have real institutional money behind my trades. I'm trading on side with the actual big money. Okay, so super, super powerful concept here. Now, what we're looking at as we head into that news event is going to be for the actual result to be way out of line with the forecast. That's ultimately what's going to drive the best trades for this session. Now, just a quick technical note now, we're going to go intraday. One of my favorite tools for looking at intraday action is going to be volume profiles. Now, I have here a weekly volume profile on gold, and what we can see here is the value area. The value area is where 70% of all the trade for that period has so far taken place. So literally that value area is what the market considers fair value, the literal definition of what fair value is. So where we are relative to fair value tells us if the market is rotating, if it's going to be more range bound, or if it's going to get trendy and exciting. So this is a weekly profile, and I'm now going to pull up a daily volume profile. And what's really important to me as I'm looking at the day and how the day is developing is where we are going to be relative to previous day's value. If we're above previous day's value, then I want to see previous day's value act as potential support, act as a potential magnet to draw prices in and then repel prices away. All right, it's 8:30. Let's go take a look at what that news event tells us. And that's going to tell us immediately whether or not we have some fireworks on hand. Okay, so we take a look at this reading here. We got a reading of 199. That's bearish. It's not very bearish for gold, but it's somewhat bearish for gold. Okay. Now, just answering some questions here to confirm, you only use the open and close of the candle for one time frame up. I use the open, the high, the low, and the close. And when I'm talking about previous day value, so when I'm talking about gold specifically, I like to look at the full session. All right. If I'm looking at equity index futures like ES or NQ, I like to look at prioritizing RTH, which are the regular trading hours, the cash session hours. But if we have a big move overnight, whether it's because of profit taking, some kind of fundamental repricing, that's when I'm going to start looking at the overnight ETH session as well, electronic trading hours or extended trading hours. So we can see that the news event here, that reading should be a little bit bearish for gold. Now, the ones that are slightly lesser importance, like productivity, preliminary, we can see here also bearish for gold, continuing jobless claims. That's actually bullish for gold. And then unit labor costs, we can see that that is very bullish for gold. So what we have here is a mix. We have the highest impact news event being bearish for gold, but we have two medium ones supporting gold. Being also bearish gold, and then we've got two that are bullish for gold. So overall, it's a little bit of a mixed fundamental picture. Now, what I want to see here, if we take a look at overnight trade, where did the majority of overnight trade in gold happen? Happened roughly between 43.42 and 43.13. Okay, and I would consider that range to be fairly balanced. You can see that attempts to migrate the market out of that range to the upside have failed, but buyers have been eager to step in. So my preferred scenario here to be trading gold for today would be a pullback into this zone down below, roughly 4,300 to 4,288, and let's see if we can get a buying response anywhere in that area. The alternative would be to trade pure momentum. And to me, that would really be a lesser plan B type of situation. But what that would involve is, do you see up here how we sort of traded sideways outside of that value area high from the overnight session? This is called building a range, building value. This is called acceptance. For me, trading a breakout, acceptance is part one. We need acceptance beyond value. Part two is actually waiting for price to migrate strongly out of acceptance. So we built acceptance, that's part one, but we couldn't get the job done. Buyers couldn't get the job done and actually move value higher. So what I'm going to do here, very simple. I like to just place an alert on the value area high, so that way I don't have to be glued to the chart. I'm going to place an alert on the value area low, and now I can start shifting my attention to other markets. So we can see that oil, I'm just going to pull up a weekly profile of oil. We can see that oil is trying to migrate value higher, where? Towards the upper boundary of this range right here. Now this makes complete sense to me. I think this move is going to be largely technical. Again, what am I going to do? I'm going to set an alert at this area. Now, quick volume profile lesson for you guys. We can see that this is a lower volume area where we have big, thicker bars. This is what's called a high volume node. This is where the majority of business got done. Whenever you see high volume node, that means there was a lot of two-way trade, buyers and sellers, both exchanging inventory, both trading back and forth. A low volume area is where there was one-way traffic. And you can see that very clearly where we had a sharp sell-off. So when we have one-way traffic, that's where I get super interested in the market. Because if these aggressive sellers still believe oil should be priced lower, they're going to defend this low volume area, which is where buyers ran into sellers right here, right on the edge of that high volume node. The best trades are always going to be found from the edge of value. But what do most retail traders do? They love to trade in the middle of value. That's what institutions love, because that's where they can just literally grab liquidity, chop you up. And a lot of people think that liquidity is found above highs, below lows. It's not. what the volume profile clearly tells us is that the majority of liquidity is actually in the middle of the range, right? So you do not want to, excuse my crude expression here, diddle in the middle. You want to fade or trade the extremes of value, right? So that's oil done. Now I'm going to move on to NQ. You can see that NQ is kind of ranging here as well. And on that weekly profile, we are coming into a low volume node here as well. So this is one prime pullback area that I'm keeping an eye on as well. Okay. Now I'm going to take a look at both the cash session profile from yesterday. So we can see that yesterday we had the value area low all the way up here. So that's a big move for NQ to just get back to yesterday's value area, but it's something worth keeping an eye on. And we can see that we're below yesterday's value area low. Now, again, we went up how much? You know, like well over 2,600 points. That's an insane move for us to be pulling back. You know, I'm just going to throw some simple fibs here. For us to be pulling back so far, only 23.6% is a very healthy pullback. Very, very normal so far. Now I'm going to look at the full session profile, which includes overnight trade, and we'll just see how that's a little bit different. And we can see that the value area high of the overnight profile is here. Okay, so that's definitely one area that I want to be keeping an eye on. I would love to see us build value above the value area low as we head into the cash session open, and that could lead to a rotational trade back up towards the overnight value area high around 29,550, 29,580 or so. However, if we break below this low volume node, then I think we have a pretty clear drop closer towards 28,965 down to 28,910 or so. Okay, so just marking out my zones again, just based on volume profile, based on seeing where the market has done business, where it hasn't. Now, if we take a look, what's been going on in NQ? We've been in balance on the monthlies. We've been in balance on the monthlies since June. On the weekly time frame, last week we had this long lower wick here, and you can see that we're reclaiming the value area low, which in a balanced market, what do we want to do? As I said, we want to fade the edges of value. We want to trade the range. So we want to sell the value area high. We want to buy the value area low. And that's exactly the type of trade that's been paying. By the way, did you know 80% of the time when we reclaim the value area low, we go back towards the value area high. But the point of control is a strong initial target. So this is a volume profile from the lows to the highs here, okay? So on the weekly, we're in balance, but so far one time framing up. On the daily, you can see we've been one time framing up for 4 days. So now we are potentially creating a little bit of balance, maybe a little bit of one time framing down. Again, very normal, very healthy. It's going to be a very similar story here with ES. ES looking stronger, frankly, obviously, as ES has made new all-time highs. Okay, so taking a look at ES as well, we're going to open up our profiles, and you can see just visually how this is a balanced structure. So we don't want to be trading in the middle of that balanced structure. We want to be looking for our trades at the edges of value. Now here, that's our weekly profile. We're right around the point of control, which is the highest volume node in a volume profile, and that is where the most business has been done. And you can see indeed from the week, this is where we've had the most two-way trade. Makes complete sense. The overnight profile is very balanced, as we can see. So I want to see us migrate away from that range. And when you have a tight range, that's when we can expect a more violent breakout. The cash session profiles from yesterday, again, I want to keep an eye on the value area low here and the value area high. So what this tells me is that to go short, we really need to break below 77.44, 77.43 in ES, and the natural target would be yesterday's value area low from the cash session, circa 77.10. For us to get bullish here, we really would have to break out, do what? Above the range, accept, build acceptance, and then once we have acceptance, then I want to see a breakout towards yesterday's value area high. So very straightforward trading parameters for equity indices, in my opinion. I believe there's a reasonable trading plan to trade both ways, be a buyer or a seller today in both ES and NQ. I think with NQ, however, it's a little bit messier because I don't want to short until we get below 29,233 for day trades, right? So my preferred scenario here is that we actually do find some buying and that we continue the larger overall trend, but I am open to further rotation to the downside. Coming back to our friend gold, we can see here that we haven't really backed off too much quite yet. You know, but we're still a little bit further away from either of those alerts. So just keeping an eye on that. We're flirting with yesterday's daily high as well. Okay, so pretty muted here in that New York Open. Just keeping an eye on the chat here, guys. All right. Okay. Keep the questions coming. If you guys have any questions about how I'm breaking things down, what trade setups I like to look for, let me know as well. More than happy to go into detail on that. Just keeping an eye on everything right now. Just going through the major markets one by one. I'm not personally seeing any trades that interest me right this second. And that's perfectly all right. We've had some mixed fundamental news, and that's resulted largely so far in pretty boring price action. Okay, I'm going to take a look at Bitcoin next. And Bitcoin, I have some bad news for Bitcoin bulls, I'm afraid. So Bitcoin, we've been one time framing down again with June. We're still in a balanced market regime. So on the monthlies, we're in balance. On the weeklies, we're in balance. On the dailies, however, we have been one time framing up, but only towards where? The upper boundary of that range. So do I think we have a little bit potential higher to go in Bitcoin? Yes, I do, but I don't think we're done flushing out yet. Okay, so in Bitcoin, just my personal target would be a little bit below 50,000. That would be ideal. I'd love to buy Bitcoin at a discount. If you have an average price in the 80s or 90s, don't come at me. You know, I think lower would be very, very ideal, you know, for the flagship cryptocurrency still. Taking a look at the dollar index as well. Oh, great question from Seb. Do you classify low volume nodes differently depending on what time of day they were formed? Yeah, definitely. And that's why I like to prioritize the cash session profile typically for the markets that I trade, which tend to be US equity index futures. If I'm day trading, you know, because most of the volume there is going to be built up during that New York cash session. So it's going to be a little bit more significant. With gold, you know, it's a little bit different. We do see pickups in volume, I think, during Asian and London. But brother, you are the gold goat, far more so than me. I swing trade gold, not so much a gold day trader, to be honest. So but the short answer to your question is, the period where you typically see the most volume, whatever that session is, that would be the session that I would prioritize from a profile perspective, for sure. Okay, now with the dollar index, one of the things that I've been calling for is actual for this dollar strength here to run into some pretty serious selling, and I think that's underway. My big call in the dollar is significantly weaker prices, or weaker valuations, not higher valuations. So this is for you FX traders, okay? Broadly speaking, bearish dollar across the board. Aussie, Euro, dollar yen, even dollar CAD. I'm bearish dollar, okay? Dollar yen is going to be the most difficult one from a volatility standpoint. So, you know, just be very careful with your position sizing. We all know what's been going on with dollar yen with the intervention here. And I think this little pullback here is going to be very important for us to keep an eye on. I had 158.50 as a potential pullback level, you know, so I think we can trade a little bit higher, check the value low of this little mini balancing range that we created. So yeah, sorry, just a little bit above 158.50. Looking for that buying pressure to be absorbed, and then looking for another significant leg down. You know, that's my call. We had someone ask for the Dow, so let's take a look at YM as well. Here, what do we have? Not slowing down. Here currently in August, we're one time framing up on the monthly, but as of July, we were in balance on that monthly time frame. In the weeklies, same deal. We're one time framing up, but as of last week, we're still in balance. So that really brings us to the dailies where we've been one time framing up for 3, 4, 5 consecutive sessions. But look at the wick on yesterday's candle. That tells me, that at the top we had some long liquidation. So realistically, I'd be surprised if we got another new all-time high in the Dow today. I think balance is going to be the most likely scenario here. And if I go intraday on our time frames, we can take a look at what the weekly profile looks like so far. Okay, so this to me, 54,489 to 54,375, let's say, is going to be the key demand region. And we can see, in fact, that we tapped into that yesterday afternoon. And I believe this low volume node is going to be fairly significant for us to keep an eye on as potential overhead resistance as well. So that's roughly 54,690 to 54,830 or so. So that's based on the weekly profile. Now let's take a look at yesterday's cash session. So the point between the zone that we just drew on the upper side spans the value area high from yesterday to the point of control. So that zone has us covered. And then on the overnight session, we have a tight range. So I'm really looking for continued balance here in the Dow. I think that would be the most likely scenario. So what does that mean? I'd be looking to fade pushes into the upper zone and fade pushes into the lower zone. If we break that lower zone, then we could definitely see some rotation. There's a low volume node here on yesterday's cash session, or Monday's cash session to keep an eye on, just around 54,200. And then we have that value area low from Monday, right below 54,000 as well. Okay, so that's it for the Dow. Of all the equity indices, the Dow to me right now looks to be the worst to trade from a day trading perspective. Probably the best trade for the Dow would be a push somewhere into this region here, circa 54,720, looking for a sweep of those highs and potential rotation. But I think the volatility in the Dow is going to be relatively muted. I think NQ and ES looks a touch better in my opinion. So we can see NQ maybe making another return there. For ES, NQ, YM, some psychopath here trades the Russell. I'm a big believer in really only trading those equity indices as we head into the cash session. Okay, pre-cash session, really tough. Globex overnight trade can be very good for equity index futures, but just before the cash session open is tough unless we have a clear fundamental catalyst, which I don't think we really have. Okay, moving back to gold, and you can see just how boring this session is, right? And now boring is not bad. I know we all want to make money. We all want to get into trades, but the important thing that I'm laying out for you is how important it is to come into each session with a plan. Know ahead of time what it is you want to do. Know where you want to do business. You don't want to take trades just for the sake of taking a trade. You really want to predetermine as much as possible what your trading decisions look like. Now, the reason for that is that the moment you actually give yourself permission to take trades, to take on risk, to enter long or short, you actually start trading in a severely degraded state of mind. And that is scientific. There is a biological reason for that. When you actually start trading, which means you have risk on the table, what happens is that your brain enters a fight or flight state. Okay? A fight or flight state. And when you're in that fight or flight state, the lizard part of your brain takes over. Your brain is flooded with hundreds of hormones and chemicals, the most powerful of which being adrenaline and cortisol. Now, adrenaline and cortisol do play an important role in terms of that fight or flight response, but what it does do is it also stops the logical, problem-solving, rational part of your brain from firing and working. That is intentional by design. So when you start trading, as soon as you have risk on the table, the fight or flight part of your brain starts to take over because it recognizes trading as a fight or flight type of situation. It recognizes trading as a threat to you. So it doesn't care about making money. It doesn't care about what your trading plan is. Once you're actually trading, all your brain cares about is fight or flight, getting you out of that situation. And that is why when we're in a winning trade, We want to close that winning trade as early as possible. We hate giving back profits because that is akin to losing that fight situation. We want to get out intact. And it's the same reason why we move our stop losses. We want to avoid pain. We want to avoid suffering. So our lizard brain doesn't care that if we move our stop loss and blow our account, that's actually going to be more painful than just taking a small loss. It doesn't care about that in the moment. All it cares about is that if I move my stop loss, I'm not going to get stopped out yet, and maybe I'm giving my trade a chance to work. So the moment you start trading, the moment the session starts for you, your decision quality falls off a cliff and it never actually recovers. And that is why it's so important to predetermine all your trading decisions. So before I start my session, I know what I'm trading. I know what levels I want to trade from. I know if today I'm a buyer or a seller. I know what I want to look for as far as actual triggers to get into a trade looks like. I've predetermined all those decisions so that by the time the session comes along, I want to take advantage of the benefits of adrenaline that my lizard brain is putting into my brain. And the benefit of adrenaline is hyper focus, it's pattern recognition, but you do get that tunnel vision kind of aspect. And everyone here who's ever traded knows exactly what I'm talking about. You get tunnel vision on the market. That's good only if you have a predetermined plan. So when I'm actually trading, that's actually phase 2 of my trading day. Phase 1 was the predetermination. Phase 2 is execution. In execution, I'm not thinking, I'm not strategizing. My only job is to react to what my trading plan actually tells me to do, whether it's to get in, get out, what size. I've already made all those decisions. I just have to react to the technical trigger that's right in front of me. Okay, so I hope this helps. This is something that is so important. Just making that one change is going to have a tremendous impact on your trading. For day traders, step number 3 of the session is just as important as stages 1 and 2. Step number 3 is what I call the post-mortem, or the reconciliation. It's where I grade all my executions for the day through the filter of my predetermined plan. So it's very simple. Did I make money on the trade? Did I lose money on the trade? And did I follow my process? So if I have good process, good outcome, in other words, I followed my plan and I made money on the day, that's good. Now the next thing that I want to do is take a look at my decision quality, and I want to figure out if my decision quality was on point. Like as far as my sorry, I've got this alert on that just keeps ringing. Not sure why. Okay, there we go. So with my decision quality, was my execution on point? Did I hesitate when I saw the trigger that got me in a few points late, or did I actually have clean execution? So good process, good outcome, still very important to assess. It's not good enough to say, oh, I had a green day today, I did well. And then we have good process, bad outcome, which is when you followed your plan, but you lost money on the day. That's the hardest box for a trader to sit in. It's hard because you start asking yourself, what could I have done to prevent a loss? But what we don't control as traders is the actual outcome of the next trade that we're in. You will take losses. I take losses all the time. It's part of the game. You cannot have big wins without being willing to take on small losses. It's impossible. So good process, bad outcome, acknowledge it. Acknowledge that you followed your plan. Acknowledge that you did everything right. Carry that with you into the next session. Now we have bad process, bad outcome. I didn't follow my plan and I lost money. Okay. At least the feedback is honest. You know what to do for next time. And then the most dangerous box for a trader is when you didn't follow your plan and you made money. Bad process, good outcome. That is so dangerous, because if you don't sit down and acknowledge that and recognize that you need to go back to following good process on the next session, I tell you this, bad process, bad outcome is always going to lead to bad process, disastrous outcome. So the day when you didn't follow your plan, you leveraged, over leveraged, you revenge traded, you doubled down on a losing position. Those are the days where when you get away with that, the next day you're probably going to blow an account. Okay, so just some quick insights there. I wanted to give you guys some value because I genuinely just don't see any trades setting up here. Gold, we're at the value area low. Again, I want to be a cautious buyer of gold. I don't really want to get short unless we really start building value below 42.88, and that's $21 or so away from here, more than $21. So I really want to favor buying. Ideally, we're going to get back to yesterday's value area high. That would be by far the best scenario. So remember what we saw today. The fundamental news was mixed, but ultimately what we were looking at was The most important news event being bearish for gold in the short term, and that's kind of what we're seeing here, right? So I think we're going to see something similar. If gold is selling off, yeah, ES is holding near its overnight value area low. NQ is holding, but below its overnight value area low as well. So some lower rotation in risk assets would be fantastic. And I'd want to see, as we head deeper and deeper into the real, when I'm saying New York open, I'm saying the stock market open, want to see if buyers can really start stepping up. So a little bit of a flush lower in gold would be fantastic. What would change my view if we reclaim 43.12, 43.12, 43.13, and we start building serious value here, breakout, pull back, check that value, and then go. That would be my plan B trade here if I was day trading gold. Okay, but in the immediate short term, don't really see anything that I have to do. Question from Sule. How can you learn the strategy? Okay, this is not a strategy. I don't really believe in strategies. What I believe is in understanding important market concepts. And the most important market concept to understand is when institutional participation is actually present and when it's not, because they're not always present. And even when they are present, it's not always to the same degree. Okay, so what we saw here, for example, in ES over the last several days, that has been institutional participation aggressively taking liquidity from the market, aggressively repricing the market. That is when I really want to be trading. So it's not a strategy, it's more an understanding of concepts. And the concept here really is through the lens of auction market theory. Okay, it's understanding macro and fundamentals, which is what the market terminal does for you. It makes it as simple as it could ever be. I used to call our terminal Bloomberg for retail. It's actually now better than Bloomberg for retail because we have Ask Market, which is your very own like fundamental analyst, right? Like I come from the hedge fund industry. We used to have 7 figures in payroll for analysts. Like collectively, not that an analyst made 7 figures, that would be insane, but just saying that our collective payroll was very expensive. And when you have that kind of payroll, and the vast majority of it can be, I don't want to say the vast majority of it, but a lot of it can be replaced by an AI agent. Man, like that's insane. We live in 2026. Times have never been better for retail. So learn the fundamentals. And if you're not sure on where to go, now we have an analyst that's going to do all the heavy lifting for you at the market terminal, right? So Ask Market, just what a crazy innovation. Understand auction market theory. Look up Jim Dalton, right? I mean, just for me, the best absolute resource to understand how markets move through the professional lens. Okay, got a question of, when it comes to volume profile, do you place more value on the RTH session or specifically for ES and NQ? Michael, great question, brother. I'm going to help you out immediately because there is a very clear answer to this. I prioritize the cash session, so RTH. The only time that I really like to look at a full session profile is if we had a huge move overnight. So, give you an example of this. Look at here on Monday. What did we see? We saw a big move up, and then over, actually Monday's not the best example. Last Friday to Monday, I'm trying to look for a day where we had a really big gap between the overnight and previous day session. Okay, here's one. Wednesday, July 22nd and Thursday, July 23rd. This is where the cash session ended. This is where the next cash session opened up. Notice how there's a gap of like 50 points. Okay, that's a big move overnight. So when we have a gap of 50 points between where the last cash session closed and the next cash session is going to open up, that's when I'm going to look at a full session profile combining ETH and RTH. Okay, and now I can see, okay, here we had seller control, and now as we come into that cash session, I have a slightly different profile heading into it. And I'll draw a fixed range profile to make it a little bit more precise here, just so you can see how we were when we were opening up. And this is what that fixed range profile would have looked like at the time. So you can see that as we opened up, where did we go? We went right into the low volume node here, found a seller response, and then it started to rotate lower. Okay, so I hope that helps. We're coming up to the top of the hour, guys. So one more question. What's the cash session? So for US indices, ranges from 9:30 a.m. Eastern to 4 p.m. Eastern. Those are the operating hours of the US stock market, at least for now. All right, guys, thanks for hanging out with me. Again, I think this was pretty boring tape, pretty boring price action to start the day. Looking to see whether we can muster a good buying response in gold from a little bit lower. But yeah, that's pretty much it. Otherwise, wait for that 9:30 a.m. open if you're trading ES, NQ, YM, etc., etc. All right, folks, thanks for hanging out. See you guys soon.
All right. Good morning, everyone. Good morning, good evening, good afternoon. I'm sure you guys weren't expecting me to come back so soon, but I am back. Good morning, everyone. How is everyone doing? Let's see what we have in store today. How is everyone doing? How have we done so far? Not much has changed since yesterday, but let me just share my screen real quick and I'll show you what is happening. Hello, be busy. Good to see you as well. Gongu Miu. I don't know if I pronounced that right. Good afternoon, good evening, wherever you guys are from. Where are you guys from, actually? I wanna know. Where are the majority of you guys from? Good morning, Matt. Yes, I am doing well. How about yourself? Good evening, Soren. Yes, I am back. Didn't expect to come back so soon, but here we are. Gambia, Portugal, South Africa. Wow. Very nice. Very nice. Need to go holiday there soon. Australia. Wow. We're all from everywhere. Hong Kong, England. Nice. Another fellow Brit. Canada. Let me just show you guys what I'm thinking real quick, and then we can have some more fun. Okay, France, East Africa. Hello. Yes, I am new. Second day on the job. Hong Kong, Lebanon. Where am I from? I am from London. Yes, London, United Kingdom. Born and bred in London. Parents are from Vietnam. But yeah, let's get started with... I just want to break down what we're currently seeing from a macro perspective and from a higher time frame perspective. This is how I'm currently viewing the markets right now. Specifically focusing on NQ. This is the weekly time frame. This is what we have, right? So I'm just going to draw out these boxes and then I'll explain them in a bit. These are your balanced price ranges. So what I mean by balanced price ranges is when the market is consolidating, when we are finding balance, when we are finding fair value between both buyers and sellers. Hence why the market is able to facilitate a large number of transactions here, and hence why this is where you get satisfaction from both buyers and sellers. This is what we currently have. On the weekly, we have this consolidated range. We break below, aggressive sellers become more aggressive. They overwhelm buying supply with demand. However, the important thing here is, and the key thing to know is, we couldn't find acceptance below that level, right? There was no acceptance at a lower level from sellers, and as a result, aggressive buyers actively pushed price back inside our fair value. And as you can see here, as you would expect, when we come into fair value, you're starting to get that consolidated price action. The market has good memory. It will always remember where it was previously balanced and where it was previously imbalanced. As a result of this, when we come back, we start to consolidate again for a couple of days because previously buyers and sellers found satisfaction at this level until buyers break above, they get more aggressive and they start to consolidate and find acceptance. Anytime you have a consolidated phase, anytime you have a balanced range, that means the market is accepting that price. That price point is acceptance, right? So when you draw out a volume profile, right, from this low to this high, so let me just find volume profile. I haven't used volume profile on this in a while. But when you draw out the volume profile, you can see the majority of the volume is going to happen within your consolidated, within your balanced stages of delivery. This means the market is accepting that level, right? So When volume is consistently building higher, when buyers consistently find control, get control, become more aggressive, overwhelm selling supply with buying demand, and finds acceptance in the form of balanced ranges, and the volume starts to build, this is where you would anticipate for higher price action. As you can see here, aggressive sellers become more aggressive. They break down, we tried to find acceptance, but they were heavily absorbed, and aggressive buyers responded and brought price back up to this range high. And from there, imbalance until we find another balanced stage of delivery. So in terms of volume and in terms of where the market is finding balance, it's consistently finding balance at higher prices. Anytime sellers try to step back in, break below, they were quickly absorbed, rejected, no acceptance, buyers quickly step back in. So in the long term, on a higher time frame, specifically the weekly, I am looking for bullish price action. However, if when you're looking at current price action, it's the same thing that we're getting here with what we could expect previously, right? We're currently coming into a balanced range. This is where you could anticipate for some sort of a consolidation before buyers potentially become more aggressive, break, retest, and continue higher. That is what I would currently be looking at. That is what I would be favoring. I wouldn't really be looking for short trades there, right? If you're trading normal price action, don't get caught up in like this being a swing low, you break below, it becomes a market structure break. You always have to look at the overall narrative. It's going to be very unlikely that we continue lower if value consistently is getting built higher, right? So it doesn't, sellers aren't really high probability at the moment. So that's what I think for the high time frame. Bounce on the last balanced range. Are you talking about this one? Yeah, I mean, we kind of missed it by a couple ticks, couple points, but you know, it is what it is. Ideally, that would have been ideal, and then we bounce from here and then continue higher. But yeah, like this is another example, right, of what I'm trying to say. Balanced ranges are magnets for price. Anytime it breaks above a balanced range or breaks below the balanced range, the opposing side will always try to do responsive selling or responsive buying to protect whatever level is below, whatever level is above, and bring price back inside the balanced range. That is where the market is most optimal. You should always be aware of where the most recent balanced range is and where the previous few balanced ranges are, because that will frame a narrative. If we get something like this, right, where we break below, this is the current balance range, we break below, we come back, right, buyers are clearly in control here. However, they are unable to sustain control and sellers become more aggressive again, then there is a very good chance we come back into this balance range, right? And then we start to build value over here. This is where you could start to anticipate for a potential reversal to probably this low and maybe even down here. If we break below here and you get something like this, where we continue to build value. But for now, nothing screams out that is going to happen at the moment, right? Value, balance range, break below, sellers did not get rewarded, they failed to find acceptance, buyers step back in. So now the most likely scenario is going to be something like this, right? In my personal opinion, especially with ES, this is ES, right? Especially with that already creating all-time highs consistently. So NQ should just follow through. Same thing with YM, right? YM, ES, NQ, they are the trio. Usually, if there's one lagging asset, it's going to eventually follow through. I wouldn't look at it as like a divergence. So NQ is only a matter of time, in my opinion, before we come back to all-time highs. Right. Next significant levels would be 30k and then 30,500. Those would be the next significant levels that I would be looking for. And then we'll see what we get from there. Again, when you come back down onto the daily time frame, it becomes a bit more clear. If you trade AMD, if you trade auction market theory, not auction market theory, accumulation, manipulation, distribution, it's clear. Accumulation, manipulation, distribution. It's a bit like pattern trading with AMD, but this is the theory behind it. Balance range, we break below, aggressive sellers fail to find acceptance, buyers quickly absorbed, initiates higher, right? And this is where you could expect for this likely scenario to play out. However, of course, don't anticipate it until we actually break above, retest, and continue higher. Right, there's a good chance we just find consolidation here again. Two-sided price action, and it's not going to be as high probability. So that's what I currently see on the weekly and the daily. Let's change to fun charts now. Right, and now if you break it down even further, going into today, here's what we have. Like I said yesterday, balance range, where we could find potential balance here, where we might continue to consolidate, especially as we have NFP tomorrow. Do I pay attention to the fib? No, I do not. No, I don't. But yeah, we have this balance range here. Could find continued consolidation. However, we do have this low volume node, right? Even though value area was being built higher, so far we are playing below the yesterday's value area low. So in terms of yesterday's prior session, and also this naked value area low over here, we are playing below those levels. So we are in a balance, we are in an imbalanced state of delivery. And this is where you would expect, if price holds below here, we could get an expansion lower to fill in this low volume node. This was very one-sided. The market had very little interest here. So very little auction happened here. There was pretty much very little auction, and it's a low volume node. We should expect for fast price movements, especially as we are in an imbalanced state of delivery from breaking below the naked value area low and the prior session's value area low. Like I said, this is my extended trading hours, right? So this isn't regular trading hours in terms of market profile. So that is the ideal scenario going into today. However, if we fail to find acceptance below here and price comes back into here, then the chances of that, then the day becomes a bit difficult to read. However, it's not impossible because you can play break and retest back up and into this value area low, or you would just have new ranges that you mark out within the session, right? Like so, where you could play ranges and then just play within the naked value area low and this naked value area low. So that is what I'm currently viewing. It's not as low probability as if you come into here, right? If you come into the previous day's value area, then it becomes a bit iffy since this is a balanced range and you could expect for consolidation. But here, when you break above, it's just going to be like, it's still outside of the value area. So nothing too significant there. But yeah, let's see how the market opens today and then we'll determine our narrative even further. That's what I'm currently looking at. If you look at if you have a look at TPO, right, as mentioned, this is my regular trading hours and this is the extended trading hours. On the left side, value area here is being calculated by time. Value area on the right one is calculated by volume. So I'm looking pretty much just for divergences, right? If, for example, time point of control is lower, but volume point of control was actually higher, then that is a divergence to the upside. That's a bullish divergence. If the time point of control was higher, but volume point of control was lower, then that is a divergence to the downside. Because where the market wanted to spend the most time, it actually wasn't able to facilitate as many transactions there as the volume point of control. That is where the market actually facilitated orders, and orders being facilitated, volume transactions are actually what moves the market, not time. Right, so if you look at the extended trading hours, in line with our low volume node, we have these single prints, and we also have this naked time point of control that we could potentially use as targets. And apart from that, nothing else really stands out at the moment. We do have a buying tail at the moment. However, the tail hasn't even closed yet, so that could very well be filled in once the market opens. And yeah, so that's what we currently have with TPO. Go back to these charts and then start marking out our levels. Right, so like always, I want to be wary of naked value error lows, naked value error highs, and the previous session's value error, as well as the volume point of control. 29472. Going to be a level to look at. That is that's Tuesday's naked value error low. And then yesterday's value error low is at 29728. Naked value error high, 29969. However, because it's close to 30,000, you could just round it up to 30k if you want. Right, that's also an option. And then volume point of control, 29770. I'll mark it like this. And then those are my levels for today. Drawing out the volume profile from market open. And then I'll draw that out to 930, and then I'll draw another one from 930 onwards. Right, so that is how I draw my volume profile. Of course, I draw it based on time. It's entirely up. It's pretty subjective and whatever works best for you guys. The best way, in my opinion, is to draw it based on price action. But I personally just use time. It's much easier for me. So this is what we currently have. Right. Yesterday's value area low, volume point of control, value area high. And this was Tuesday's value area low. So as long as we play below these levels, then we are in an imbalanced state of delivery. Even if we come back up into here, all right, this is still an imbalanced state of delivery in my opinion, relative to yesterday's value area. So I'm not looking for, any balanced price range plays. Yeah, hopefully we get an expansion lower. But here's what we have in terms of context. Hello, Kevin. I am using exocharts. Yes, exocharts. For those who are new here and wasn't in yesterday's stream, the composite profile on the right is just the volume profile, dynamic volume profile of the entire day. And then the composite profile on the left is my delta profile for 30 minutes. EXO chart, so EXO chart. It's just on top here. Yeah. But like the same thing, the same software you get, the same features you get on EXO charts, you get more of that with deep charts as well. Yeah, if you use deep charts, code CF, I believe you get 30% off. So yeah, the same features I have on EXO charts, it'll be on deep charts as well. You explained very well the levels you use. Can you elaborate on your entry criteria and execution? Yeah, so I'm a range trader. So even though with the levels I have, all right, ignoring the levels for now, I typically want to identify passive protection levels. Once I have passive protection levels, this is the balance range I have. If I get buying absorption there, I would go short to the low. If I get selling absorption, I would go long to the high. Once we've broken out of the balance range, I'm looking for a retest. Same thing, right? Break below. I want to see aggressive buyers really step in here and move the candle, move the needle, move price, because that is showing you once we've broken below the range low, aggressive buyers are aggressively trying to step back in to bring price back inside our optimal range. The balance range is an optimal range. That is where the market is finding fair value. So this is what I want to see for high probability setup. Sometimes I can just enter off of here if we get buying absorption within the candle, but the market has to be extremely volatile, right? If we are in like a higher time frame balance range, I wouldn't necessarily do a breakout like that, right? Or if we're in like a positive gamma regime, that's not something I would be looking at. So in summary, right, this would be the best one because that means aggressive buyers are stepping in, they're getting rewarded. However, as they approach the range low again, which by the way becomes an inversion level, but sometimes you don't always get it back inside the exact level. Sometimes if you get this, right, where the retest actually happened lower, that is still valid for me. Because as long as I get this leg higher, showing you buyers are in control and they're trying to bring price higher, but they don't get rewarded as we come to the top, and then we get buying absorption here, then I would look to go short to capitalize on the downside, right? And it's the same thing for the highs until we find another level of support, and then that becomes my new range. Gamma just has to do with options flow and hedging. I don't use it significantly yet in my trading. I just have it open to look at. But it's not fully in my plan yet. I'm still testing it out to see if it makes a difference. But the main thing with me is I want to keep trading as simple as possible. Like, there's a lot of order flow indicators out there that shows you different things, but at the end of the day, it's just the same thing with a different angle. The main thing I use is always going to be big trades, delta profiles, delta clusters, cumulative volume delta, VWAP, and that's it. The rest is range. Do I trade options? No, I do not. I only trade futures at the moment. Futures, I trade futures NQ for scalping, and then when I'm swing trading, I have a personal CFD account. So I swing trade on CFDs, and then I scalp on futures. But yeah, this is currently what I'm seeing. Like, let's line up. Right, this becomes an internal level. Not an internal level, that is an external high. The reason why this is an external high and not this one is because this was the naked value arrow low. Do I use VWAP bands? Yeah, I do. So if you look here on the left, this is the time frame chart. I just have it out, but I don't look at it religiously. All right. Especially with NQ and the type of market conditions we've been having, you think when we come into the first standard deviation, the fourth standard deviation of VWAP, we're going to get like a large rejection back inside VWAP, and you're looking for a mean reversion play. But from what I've seen during these market conditions, we could just continue breaking lower. So I don't look at it like religiously. What time frames do I trade? I trade the 80 range chart. That's the main time frame I analyze and execute on. For my mid time frames, I also have 12-minute and 1 hour. And then, of course, for the market profiles, I have daily profiles. Ignore this chart over here. This chart is just the 30 seconds because extra charts, the big trades doesn't show properly on the range chart. That's why I have extra charts. Yes, this would be considered absorption because the candle closes bullish. You have a large aggressive seller. They don't get rewarded with lower price action. So these aggressive sellers are trapped. Right? It's absorption because when you have a large aggressive participant, you ideally want the market, the candle to move with it because that is showing you overwhelming demand in comparison to supply. If you don't move, like if you have a large aggressive selling here and the market barely moves, then that means the supply, there's more buying supply than aggressive selling demand. So that buying supply is soaking up all of these aggressive selling orders, and that is where you get your absorption. Of course, absorption doesn't move the markets. You guys have to remember that. Absorption does not move the market. Initiation does, demand moves the market. Absorption just stalls price. If you get like an absorption where the market stalls and it doesn't move lower when you have a large aggressive selling, but aggressive buyers are unable to step back in, then it's not going to move higher. It's basic auction market theory and supply and demand. There always has to be initiation stepping in if you want absorption to be confirmed with a reversal. Right, 6 minutes until open. Let me just post this on socials. I get a good angle here. Posting this stream on my story. Yeah, drop some question, guys. The whole aim of this live stream is to help you guys as much as possible. I'm giving out free value here. Use the most of me. All right, posting that on the story. Which pair do I trade? I trade NQ futures. That's the main thing I look at. I don't really look at anything else at the moment. Yeah, so I'm mainly looking at NQ. That should be posted now. I've been trading for 4.5 years now. And then I obviously went to university and I got profitable during the first year of uni. And I've graduated now. So that is 4.5 years. 2.5 years. But you're never like really... It's never as easy as like one day you just wake up and you're all of a sudden profitable. Like, it's never one light bulb moment is what I'm trying to say. You're going to have multiple light bulb moments in your journey and it's never going to hit you straight away out of nowhere where you suddenly just become profitable. So even now, yes, I am profitable. I'm more consistently profitable, but every day is still a learning. It's still a learning journey for me, right? The market isn't going to be the same every single day. When you have confirmation for absorption and price will go up or down, or must price... What do you mean, dupe heck? What are my main levels every day is going to be naked value area lows, naked value area highs, naked volume point of controls, and the prior session or yesterday's value area. For me, I trade GBP, JPY, strategy, but I always get kicked out in manipulation areas. Support and resistance is a bit difficult to explain. What I would suggest is rather than marking out multiple levels of support and resistance, do it like a range, right? Once you've identified one support level, identify the resistance, and then play that as like a range. You're less likely going to get manipulated when you use that as a range because the market only moves in ranges. They are the two stages of delivery, balance and imbalance. When you have this range, is a balanced range. So you're not going to get manipulated as much until we've broken out of the low and then you've had that confirmation to continue lower. But once you've identified the range, it'll keep you out of a lot of manipulations that happens within here. That's the main thing with these ranges. Is Pav not trading? No, unfortunately, he's not. I had to come in last minute. I think something is wrong with his PC, maybe. But he should be back soon. Yeah, but I'll be the face today. When react on big trade, when you have confirmation for absorption, price. I mean, I don't just look at absorption. for confirmation. No. Like absorption, I always have to see initiation as well, or the next candle following through. Because like I said, right, absorption just stalls price. It doesn't move the market. If you just enter off of absorption, a lot of times you're going to get manipulated. You're going to get messed up a lot. Let's see. So we're starting to open now. All right, and this would be my range. Range high, range low. You could use this one as well if you prefer, but then you also have to account for this one as an internal level. So then now this becomes my range, right? The reason why this is my range low is because you have large aggressive selling over here. They don't get rewarded. So this becomes a passive buying protection level. If the market comes back into this level, you would expect for passive buyers to step back in. If you get a confirmation, you could go long. But I don't trade the first 10, 50 minutes. So we're just going to let this play out. Session value or day value? Day value area. Naked value area low, naked value area high is just a level that hasn't been tapped into. So if you look at like these levels, right? You have my naked value area low. We haven't price hasn't come back to this level yet. It hasn't retested this level. So this becomes naked. It's naked because it represents unfinished auction. Right, this is naked, this is naked. These levels are naked because we've come back into it. So that is what I'm looking for. Banks don't trip you guys. It's all like, it's all supply and demand, right? If there is more selling demand, like let's say you enter into a, right? Let's say you enter somewhere here and then you look to go long and you get taken out over here and you think banks trip you or whatever, you know, whoever is on the opposing side of the market. That's not true. The reason why that's not true, because when you look at it from a simple point of view, all it is large aggressive selling, right? Large aggressive selling demand that overwhelms aggressive buyers and passive buyers. As a result, the market has to move lower to facilitate this overwhelming selling demand with further passive buying demand, passive buying supply. Because let's say at certain levels over here, right? Each of these levels is going to have buying supply. Right, if there is, let's say, for example, at a level, in really, really simple term, at this level, there is 50 buying supply. Right, let's make it actually easier. At this level, there's 50 buying supply. At this level, there is 50 buying supply. If you have like an aggressive seller here, and they enter in with 100 contracts, right? When it comes to this level, only 50 of those 100 contracts is going to be fulfilled. So the market has to move lower to this level where there's an additional 50 buying supply in the form of limit orders to supply the remaining 50 aggressive selling demand from the 100 aggressive selling execution. Right? It's just basic auction market theory. No one is really out there to trip you up or hunt for your liquidity or hunt for your stop. It's just how the market facilitates. So you can see here, we come down. This is why I don't really like to trade the first 10, 15 minutes. It's very volatile. The levels don't tend to get respected. We come down, you get a reaction like you would expect, but price continues lower. So now your new range, I would still keep this range in mind because that's an internal level. If we get a reaction from here, this would become another range that I would be looking at. And then this becomes my external low, external high, internal. Pav was working on T and Edge, but he had issues with it. Yeah, I heard something about him having issues, but he should be back soon. What do I use for confirmation if not absorption? I use absorption for confirmation, but I just need to see follow through. So I need to see initiation as well with absorption. Absorption alone isn't enough. Did I have a mentor? No, I didn't actually. I just watched a bunch of YouTube videos. Well, I started with SMC, right? Ment FX, and then ICT, and then over time it's just a lot of backtesting and a lot of, forward testing, a lot of blowing up accounts. I've never had like a personal mentor that I paid for. I think the most I've done was pay for those groups, like $100 per month, and you're on a Discord group with pre-recorded content. But I've never had like a personal one-on-one mentor by myself. Most of it was just self-study, reading stuff and looking at the charts. And yeah. Hello, Snare Max. Hello, FX Flame Kaiser. Very clear explanations. Thank you, Glassbeer. Very much appreciated. I try my best, guys. I try my best. If there's anything you don't understand, let me know, and I will try my best to explain everything. Do you FX replay before NY sessions? No, I don't really FX replay anymore, to be honest. I don't backtest anymore. I mainly just live trade, and then journal, and track and build winning case studies. So I only build case studies around winning setups. Yeah, like I only recommend backtesting if the strategy is completely new to you. Once you familiarize yourself with the strategy, I would always recommend like live trading, forward testing, either trading with a demo account or like a small prop firm account, just to account for all the psychology. Support and resistance is a good strategy. Honestly, dude, all strategies work. You just have to dedicate your time to one strategy. The problem most beginners have is they come into the chart, they come into trading, they trade one strategy, and then like it works for the first 1 or 2 weeks, and then they have one bad week or one bad day, and then all of a sudden they want to switch. They want to switch strategies, and then that's where you mess up. That's where a lot of traders mess up. You just have to stay consistent with one strategy. Is that deep charts on the left? The ones with numbers on? No, this is Exo charts. But like I said, deep charts has the same features as Exo charts, right? And you do get a discount. You get 30% off if you use code CF. You're the best. Thank you for sharing your knowledge and experience. I do appreciate it, Tom. I try my best. Yeah, I do YouTube content. You can find my socials. It should be like on my webcam. Bro, what has been your win rate and risk to reward with order flow? With my personal account, my win rate is around 40%. Average risk to reward 2.5 to 3R. When I'm trading prop firms, I tend to do a higher win rate strategy and a low risk to reward. So that is going to be around 75 to 80%. With average risk to reward at 1R. NQ flip when NY open. Yeah, I mean that's what it looks like it's doing. I'm still not interested in price at the moment because we're only 8 minutes into the session. What do you trade most? I trade NQ mostly. How many pairs as a beginner should trade? Just focus on one asset. Literally focus on one asset. The best, like if you're a beginner and you try to focus on like multiple assets at once, you're not going to learn anything. Every asset moves in different ways, even though they look like they're similar because the candlestick patterns, high lows, high highs, lower highs, lower lows. That is basic market structure, but there's little things with those assets that move differently. So I would just focus on one asset, and one asset is more than enough to make money. Exo charts, EXO. So at the top here. How do I achieve 75% win rate? By being really selective and having, low risk to reward. Generally speaking, when you trade a low risk to reward strategy, your win rate is going to naturally increase because you don't have to be right on the whole move. You could just catch a reaction play from each individual zone. So let's say here, right? If you come into this low and you enter a position here, stop loss below there. this is already a 1-1. I mean, this is a 1 to 1.2, right? And you only need 1-1. And look, you're basically wrong on the entire move, but you get a rejection there because that is the zone. So naturally speaking, generally speaking, when you trade a low risk to reward, you're going to naturally have a higher win rate. The only reason why I do deploy strategies is because for prop firms, you want to reduce your risk of ruin as much as possible. Because you have the max trading drawdown and you have the max drawdown working against you. So you can't really capitalize on see what's happening here. Do I trade gold? No, I do not. I only trade NQ futures for scalps. Yeah, you should definitely focus on one asset first. Don't dilute yourself and your attention because you're never going to learn. What are the time frames in your charts? This is the 80 range. Like I said, I only have the 30-second time frame up because it's exo charts. There's a bug with the 80 range where the big trades doesn't show properly. So I use this just to double check all the big trade orders. What are time frames? Yeah, okay. Gold or BJBY? Dude, honestly. Let's see what we get here. With me. I'm staying back on shorts at the moment. I think we're going to continue higher based on how the M12 is looking as well. Right. Large absorption of these aggressive sellers here. Delta is the difference between aggressive buyers and aggressive sellers. So when you have large negative delta, that means there was more aggressive selling demand than aggressive buying demand. If these aggressive selling doesn't get rewarded with lower price action, passive buyers are protecting this level. And especially if the secondary candle closes bullish, that is your initiation. I wouldn't be looking for shorts if this is to happen, unless I get a clear confluence. Okay, going back to your question, gold or GBP, JPY. Honestly, there's no one size fits all. You know, you just have to backtest each asset for yourself. But the important thing is you have to stick with one. Stick with one until you become consistently profitable. Not consistently profitable, but stick with one until you see profitability, and then you start seeing results. Then you could start to test out other ones and test out adding other assets to your collection, to your watch list. But you know, all assets works. As long as it's tradable, you will make money. As long as you stay consistent with it. Is QQ the same as NQ futures? The underlying asset is the same, but the asset type is different. Big trades on the bounce on the big trade is that set up for you. Which this one? Are you talking about this short after we have this absorption? This isn't a setup for me because of what I said. And also when I play, so the way I trade, this is the external range high. This is our external range low. When we have internal levels, I don't necessarily like to play rejections off. I want to play break and retest. So for example, this would be a trade. This would be a trade. Obviously, here would have been like, you know, a lovely trade to go long, but I don't execute for the first 10-15 minutes. I just let the volatility play out. The reason for that is because in theory, once we reject it from this low already and we come back into our internal level, there's a very low chance or a lower chance of us rejecting again and coming back to this low because we failed to find acceptance at the low already. So that's why for me, it's higher probability to just wait for break, retest, and then continue higher. Right, you can see here, that's exactly what we're getting. VWAP, not a good place. Like, it's the same thing. I wouldn't look for rejections there. If we get like a break and retest, then there's potential. But the distance from here to here is not that many points. 40 points. So it'll be a low risk to reward trade. Where am I from? I am from London, UK. I'm always looking at the M12 as well. I don't want to go against the M12. Like if we are heavily bullish here, and like I said, we've had the absorption here, initiation is starting to kick in. Even though I have my ranges, I wouldn't necessarily be favoring shorting the range high. Because there's a good chance we'll break above and then it'll be a fake out. Yeah, New Malden is pretty nice. West London is nice in general. There's a Korea town in New Malden. I went once and I was pretty disappointed because it was basically just a road, like 5 Korean shops, rather than there actually being a town. But yeah, that was the only time I went New Malden. I'm mainly from southeast London. Right, so we're just hovering around the Naked Valley area low now from Tuesday. To what we're currently getting. I think my view app isn't working. Might be bugged on. Yeah, there we go. So now if we get a retest and selling absorption, I would look to go long. What's everyone thinking? Has everyone taken trades so far? Right. I'm hoping my ideal scenario over here, break above, retest, continuations higher. Right, we couldn't get a retest here. There was no confirmation there to go higher. What is my trading size? Prop firms, I'm risking $400 per trade. I think is long for a bit, maybe to previous days volume point of control. Yeah, I think because we failed to find acceptance below here, right? There's a good chance we do a mean reversion play back inside yesterday's value area. That would be a good target as well. Like buyers, cumulative volume delta is significantly increasing. M12 H1 is also really bullish. Right, so shorts, unless you're taking quick scalps, it doesn't look very favorable at the moment. What type of confirmation? I use absorption and then initiation. That's pretty much all it is. Like I want to see. Let's find a good example. Yeah, buying absorption, secondary candle, follow through, go short, stop loss above this high. That is literally the simple entry confirmation I have. Of course, with every confirmation, it's all a battle of orders. It's all a battle of orders. You're just trying to see who is able to regain control, right? For example, here you have a battle of orders, and this could be used as a confirmation because once you've identified a range, once you've identified a battle of orders, if one side successfully breaks out with initiation, you could just go short here with your stops above here. right? So confirmation isn't always going to be 2 candles for me, but the main idea behind it is always going to be a battle of orders. See what we currently have here. Playing above VWAP as well. Is there a difference between trading MNQ or NQ? NQ is just 10 times bigger. And MNQ is just 1/10 of NQ. See what we get. Like you, my bottleneck is following mechanical rules for trailing stop loss on ES in a state of imbalance. The way I trail is just based on. Let's find an example. Right, I mean, it's different depending on the time frame you trade on, but this is how I personally do it with the 80 range chart. I just identify levels of either initiation or absorption, right? So this is initiation because you have a large aggressive seller, and this is this is an absorption level. Right? The reason why is because absorption and initiation levels should ideally be protected, because when price comes back, you are expecting for aggressive sellers to step back in and protect that level. So I would trail 2 disc candles high, right? For absorption, you obviously have passive sellers protecting this level instead of aggressive sellers now. So I would just trail to this high, right? That's me being really aggressive with my trail though. I tend to just trail candle by candle because I'm playing the imbalanced state of delivery. So I would expect for fast moves anyway with the 80 range chart. However, a lot of people, they could also trade based on price action. So if you enter here, rather than trading this, right, you could move your stop to break even, but you would wait for something like this to form, where you get a minor retracement and then you get a battle of orders again, where aggressive sellers take back control. Then you could trail to the battle of orders high. Right, you don't have to overcomplicate trading. Trailing. It's all I just trail it based on levels that theoretically should be protected by the previous participant. Yeah, order flow is interesting. Like, if you don't trade, let me just post this on my story. Good. Order flow is interesting because I started with ICT and SMC. I started with normal price action, and the patterns did work, right? The patterns did work. I did get payouts with it, but I always wanted to figure out why it works. You know, I was always the one to question that. So with order flow, showed me exactly how. I'm literally looking at real orders being executed through the markets. Yeah, it's candlesticks on steroids. Yeah, once you understand the why, everything just becomes so clear. What do you mean by location? As you can see here from this current M12 candle, we're starting to there's an indecision here. Battle of orders. Need to look into which order flow tools to use. I would recommend deep charts. If you use code CF, you get 30% off. I just use extra charts because that's what I've been using for like months now. That's what I've been using when I first started order flow. So I know the in and outs of it, but deep charts is the same. It has all the features. It has more features actually than XO. But yeah, if you use code CF, you get 30% off. If you look at the M12 candle, we're starting to get a battle of order here. Indecision. No confirmation here though. Right, you don't get any absorption here. Let's draw out this volume profile. There we have it. I mean, honestly, if you're learning order flow, the easiest way to go about it is to just learn auction market theory. Learn auction market theory, learn how the market moves, and then everything else, right? All the order flow tools, TPO, volume profile, etc., cumulative volume delta, it shows the same thing, just with a different angle. Once you understand basic auction market theory, you will understand everything else. Like, you'll be able to piece everything together. Getting our break now. Looks like M12 is starting to flip. 4 more minutes until candle closure. But if we get this break and we start to see selling absorption, then I'll look to go long. Yep. There is a live giveaway in the Discord, so make sure you guys join up. Happening in Chart Fanatics Discord. Invite link in the chat. What we're currently getting, value area, value being built. Like, even from what I discussed at the start of this stream, right? You could even see it from like a fractal standpoint as well. You're getting consolidated phases. This is where you get balanced ranges, and that is consistently shifting higher. So going back, shorts doesn't look very favorable at the moment when you're looking at the immediate market structure, right? All of this is just a balanced range. Here we have a previous balanced range. Sellers become more aggressive. They break below. They fail to find acceptance. We come back up. We break above, and now we're starting to find acceptance at a higher level, past the previous initial balanced range. And, you know, value is still being built at higher prices. Before searching for absorption initiation, how do you find the zones where you're going to search for confirmation? I use ranges. So I either use the key levels, which is naked value area lows, naked value area highs, or I use the previous session's value area lows and value area highs. I don't enter off a volume point of control. That is a low probability level. That shouldn't be used as a key zone, in my opinion. And theoretically, it shouldn't be used as a key zone. The reason why is because the volume point of control is the single level where the most volume was transacted. That is where the market found balance. That is where both buyers and sellers were satisfied. So when you come back into the volume point of control, you're very likely going to get consolidated price action. Right? It's going to be two-sided price action, which is why I don't use volume point of control. So I use those levels, and then I also use my range levels, right? So I want to identify within the leg, within the price action, passive protection levels. Levels where you either had a battle of orders or you had buying absorption for range highs and selling absorption for range lows. If you look at a 30-second time frame, right, the big trades doesn't show on the range chart, but you had a battle of order here and you have selling absorption here. So this becomes a passive protection level. So those are the levels I would do. The auction is just accepting higher prices. In a nutshell, let's see what we get here. Yeah, there's just no big trades showing up here, so no confirmation. In a nutshell, the auction is literally in its name, right? Like, the bidder will only go to higher prices if there is buying demand. And it's the same thing with the markets. The markets will only go higher if there is more buying demand than supply. So let's say at 29500, there was let's do 9,500. No, let's do 29,600, right? There's a passive seller of 5 contracts. If there is an aggressive buyer with 10 contracts, then not all of it, you can't take back an aggressive order. You can't take back a market execution. Once you place it, it's going to be placed. So with 10 buying contracts, there isn't enough selling contracts in the form of passive limit orders or passive selling contracts to pair up with the aggressive buying contract to facilitate that transaction. As a result, only 5 selling contracts is able to be facilitated with an aggressive buyer at 29,600 out of its 10 buying contracts. So the market works like an auction. It has to go higher because there's still overwhelming demand than supply, right? Let's say you're bidding for a car, right? The auction is selling a car, auctioning a car, right? If there is two bidders who wants to bid the car at $100, there's not enough because there's only one supply to facilitate that one car with those 2 buyers. So the auctioneer is going to have to increase the price to 150, right? It's the same thing with the market. It's the absolute same thing with the market. Would I use volume point of control more as a magnet than a level to trade off? Yes, I would. Volume point of control, I would use as a target. I wouldn't use it as a rejection level. That's the same with any high volume nodes. Low volume nodes is where you get those fast rejection moves or you get those fast expansion moves through those low volume nodes, because there was very little interest there, very one-sided price action. Like here, you see, I'm not entertaining anything here because we're getting a battle of orders. There's no clear one-sided price action. There's no clear participant who is in control. There's no clear one-sided control here. We're just going higher, going lower, going higher. We're building value here, right? And you can see, it's exactly like I said at the start of the session. Volume is going to just be built around here. We are finding acceptance with higher prices. So I am leaning bullish. But until I get the confirmation that buyers have taken back control here, I'm going to be sitting on my hands in the meantime, right? Of course, we still have 1 hour left of the stream. So there will be tons of opportunities that will show up potentially. No, this isn't deep charts. This is extra charts. Deep charts, same thing as extra charts, more features. It's pretty much the exact same. 30% off. 30% off if you use code CF with deep charts. Thank you all for the answers. You make it seem really understandable. I am glad to hear that. Very glad to hear that. You don't have to overcomplicate trading. A lot of it is just like marketing gimmicks and stuff. But at the end of the day, it's all supply and demand. Right? If there's more buying, like if you're trading ICT as well, it's the same. Like when you get an order block, all an order block is just a battle of order. That's why you have like a down candle before you have an up candle. Aggressive selling, aggressive buying. They're just competing against each other. And eventually, aggressive buyers take back control and they continue higher. That is where your order block gets validated and that becomes a passive protection level. Because when price comes back into it, you would expect for aggressive buyers to step back in again. The market has good memory and the market moves based on supply and demand. Don't forget, we do have NFP tomorrow, guys. We do have NFP tomorrow. Don't be quick to rush into positions. It's the same thing I said yesterday. Your number one job as a trader is to not trade, is to risk and manage. Protect your capital. All right, first week of August, first week of the summer month. Tons of opportunities. I used to complicate trading, then I realized it caused so much resistance to making fast, high quality decisions in the market. I really made it my goal to scrap everything down. Yeah, literally. Like, you have to understand, right? Every strategy works, but prop firms, I think, prop firms and social media is what really ruined it for a lot of newbies, a lot of beginners, because the way prop firm models are made out, you have a set profit target and you have a set drawdown. Most of the time, you're going to have to make 150% or 200% return on the drawdown that you're given. So, for example, if you're trading CFDs, one second. If this happened, like without this move, like let's say this happened here, this would be my confirmation, right? It goes to selling, secondary candle initiation. I could look to go long here to the upside if we didn't have this battle of orders. But because we're still within this balance range, it's not going to be high probability. Yeah, as I was saying, like when you're looking at futures prop firms, $3,000 profit target, $2,000 drawdown, you're expected to make 150% return on that drawdown. And that's where, you know, your mindset for trading gets skewed a bit, because every trading strategy works. It just takes time. You will be profitable in the long run if you can make 2-3R a month. I always emphasize on this. If you want to make money within the market, the easiest way is to just do 2 to 3R a month with capital, and in the long run, you will be profitable. That's extremely easy to make, right? It's so easy to do 2R a month. If you could do that, you're ahead of 99% of traders, or 95%, whatever the statistic is. Right? The other 95%, they fail trading because they blow their account. They blow their account, they're not profitable. So you need to really reduce your expectations. Right? Reduce your expectations. You don't need to go for high risk to reward every single month. You don't need to go for high returns every single month, every single day. Blowing up prop firm accounts is fine. That's a whole completely different game. And yeah, just make trading as simple as possible. It's a very mentally taxing game. Right? This job is very mentally taxing. Especially when you have other pressures as well. You know, if you have to take care of a family, if you have work, if you have a job. Can I explain a little about risk management? That's a very broad question because risk management is different for everyone. It's also different for the setups. It's different for the types of accounts you trade as well. $29,600 is the level I'm looking out for. Now, if we get a break and retest, we got a break. If we get a retest, then I'll look to go long, target 29,600. Buyers are clearly in control here. There's no doubt about it. Right, look at this candle. This could also act as a level of confirmation. This isn't going to be as high probability as my normal setups, but if we break above this level, I'm going to go long. The reason being is because this is a passive protection level. You have large aggressive selling and large aggressive buying that doesn't get rewarded. So once you break above this level, sellers should, in theory, get exhausted. So now I want to retest with market. 1 second, let me. See if we can get that closure. I really want this candle to close bullish. Then I'll enter. Right, if it doesn't close bullish, buyers are clearly not in control yet. You see, we still have aggressive selling fighting back. Once this candle closes bearish, then the only setup would be this this retest over here. And then I'll have to wait for another setup. See what we have. All right, entering here. Into 2 positions on personal and prop firms. We do have a resistance level at 600. So once this candle closes bullish, I'm going to be very quick to go break even. All right, going break even now. So now I'm break even as we approach 29600. It's a really aggressive break even because this is a significant level of passive selling. Right. So if we reject from here, there's a good chance we're going to continue lower. My prop firm is at 1 to 1R. It's around there. 611. There. All right. That's TP on prop firms. And then I'm still in this on my personal. Prop firms, I do low risk to reward, right? Because I want a higher win rate. Personal, I could really extend out because I have the whole of my account to really mess with. But let's see what we get here. So now, as long as we're able to hold above 29600, this is going to be a solid trade, right? Could TP at 29650 or go aggressively a trail. I'm still break even. My stops are at break even on my personal. I'm out on prop firms. I'll show you guys the trade executions later as well. Well, so now you want to retest with market sellers not being able to move the price below the retest. Yeah, pretty much. If I had a retest here, then ideally want to... Okay, let's see how this kind of closes. Once we break above this high, I'm going to move my stops to 29600. But let's see. So now you want to retest. Yeah, if we got a retest here, I want to see aggressive sellers get absorbed and then initiation, and then I will look to go long from this level. Ideally, I don't want it to break below the retested level. Yeah. W's in chat. W's in chat. You see what I mean? Like you get large, you get battle orders at rounded levels. Where are you now? Where are you in your journey in trading? I suppose you're already profitable. Do you live from it? When did you start? If you don't mind. Yeah, so I'm fairly young. Well, I like to assume that I'm young. Hold on. If we break above this level, I'm going to trail my... Let me just remove this level so you don't get confused. This blue line is where my stop loss is at the moment with my personal account. I'm already out on my prop firm accounts for a W, right? W's in chat. So yeah, if we close above this level, then I'm going to look to trail to this low, right? Because we had a aggressive seller that got absorbed there. Anyways, where are you? Yeah, so I'm fairly young. I'm 21, about to turn 22 in November. I just graduated university, economics with accounting, first class honors. And I started trading when I was 17. Started trading properly at 18, right? Before someone comes at me with KYC fraud for prop firms. But yeah, I started trading probably at 18. And then I started to see profitability at 20 or just before my 20th birthday. And now I trade full time. Do I use GEX, gamma exposure levels? I do look at it, but I don't fully use it yet. I just have it on another monitor. just to see how it plays out. I haven't tested it enough, to be honest with you. Is that active participation of buyers and sellers? Yeah. So this is my dynamic cumulative profile. It represents the delta profile of the previous 30 minutes. So aggressive buying here in control, aggressive sellers here in control. We are getting a rejection off of 600s, 29600s. This is where you ideally want to see this level hold. Right, that is a passive protection level. Once we break above, stop loss below here. You can trail it a bit or you can stay at break even. Doesn't really make a difference. What platform am I using? I am using Excel charts and I use Trader8 to execute my positions. What strategy do I use? Yeah, so when I'm swing trading on CFDs, I'm literally just using the same strategy because the market is always going to move in a balanced and an imbalanced state of delivery. Right? Nothing is ever going to change. If the market is fractal on a high time frame, there's just going to be more supply and more demand. There's going to be more volatility. The levels are going to be more respected, but it's the same thing. It's the exact same thing. Is this gold? No, this is NQ. So I'm trading NQ futures at the moment. All right, could hold us to 29700 as well for a nice 5 to 5.5 R. But let's keep our TP at 29650 for now. And then we'll see how it does. All right, we're starting to get aggressive buyers stepping in here. This is where I really want it to hold control, right? What day in November? I'm assuming you're talking about my birthday. 13th of November. Congrats, thank you very much. Could you explain about what you mean by initiation? Yeah, I'll explain once I trail my stop. This low over here. And I'm out. Okay, I didn't even get a chance to move my TP. W's in chat. 3.2R. No, this was tighter. Yeah, my stop was here. 4R trade. Called from start to finish. Plus 1R as well on prop firms. And this is where you're going to get that battle order, right? You see that? Nothing is random. Nothing is random, guys. Nothing is random at all. You see how we're getting our rejection now from 29650? W's. Yeah, so 4R trade here and then 1R trade here, give or take. All right, 1R is on prop firms, 4R is on personal. Battle orders, rounded numbers, happens every single time. 29650, 29700s, 29750. There's always going to be a rounded number. W's. Right, quick rejection away. See? Could you initiation? Yeah, initiation is just when you have aggressive participants stepping in and they get rewarded. So you have an aggressive buyer here, they get rewarded with higher price action. Same thing here, almost like you get rewarded with higher price action, higher body closures. I am the 19th Scorpio gang. 6 days away. Maybe we could celebrate it on the same day. You know, Chart Fanatics birthday live stream. Give away 500 accounts. W, nice trade. WWW. Yeah, W. Do I stream regularly? Love your insights and delivery. Currently, right now, I'm still discussing with Usman. But I think if I will be streaming every week. Just need to see the exact day for it. W's in chat. Oh yeah, let me just show you my executions. Said I was going to do that. Boop, 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 boop. Boop, 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 boop. Right, long there, exited out at the highs. Boop, 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 boop. Let me show you my apex prop firms. Long there, exits at the highs. Right, 1R, done and dusted for prop firms. Close this. Move this chart back. W's in chat. Now I like to, you know, just see what the market does. See if there's any more opportunities. Is it safe to focus? Yeah, ideally, dude, honestly, my ideal setup would be executing, like having a screen showing the trade setup as well, the trade execution as well. But we're still trying to figure it out. Because like, I know with Pav, he trades on deep charts and he could link up rhythmic prop firms with it. But I analyze on extra charts and then I trade on trade of 8, so it's a bit difficult. Ugh. Right, it's exactly like I said. This is why my target was there. Nothing is ever random, you know? Once you understand supply and demand, once you understand auction market theory, you have the source. Is it safe to focus on liquidity inducement? I don't look at liquidity inducement, to be honest. So I want to tell you for sure, but I can't. It's not in my expertise. Let's go. There's a good chance we're gonna go to 29726, 726. Yeah, like very likely we're gonna get a mean reversion play back inside the previous day's value area. Am I old enough to trade? Yes, I would like to think I am. Do I look like a kid? Because I'm actually 35 with three children. Expecting a fourth one on the way. No, I'm joking. Yeah, I'm 21. You old. We can see it. I probably look older than I am because of the trenches, you know? Bro, you look like you're in high school. Asian genes. Or maybe I am young. Maybe 21 isn't young at all. But no, I graduated uni. You know, I'm an adult now. But if I do look old, blame Nazdakistan. Years of trenching in Nazdakistan has caused this to happen. Them Asian genes are working. Definitely 21. I hope I don't age, but we'll see. I do have good protocols, I would think, you know. Go gym every day, sauna every day, cold plunge, steam room. Hopefully that's keeping me young. Holding for these, yeah. I do see 700s as a good level. I do see 700s as a good level. You could even look at 726. High school with 4 kids. 2-3. This is what 2-3 years in Uzbekistan does to you. 2-3 years in Uzbekistan and forget. That'd be my dream day routine. Yeah. I mean, I'm pretty fortunate, right? That I do trade full time. So when I'm not, like, I only usually trade New York session. So outside of that, I'm pretty much free to work on my own stuff. So I go gym really early. And then go sauna, spa. And then after sessions, go to the park, have a walk. I just do random stuff. Like, I'm literally 21 and I live like I'm retired. But yeah, I am building stuff on the side as well. You know, the ambition is still there. My wife told me to stop impersonating a flamingo, so I had to put my foot down. Right, easy rejection from 29650. Break even, yeah. Unfortunate, but part of trading. Thank you very much, Midas Touch. See what the market has to offer next. Now, this is where I would pretty much shift my ranges. So instead of using like these levels now, this is the next one. Right here. Right, this is the range. And then you obviously have your internal levels as well, but I'm not going to focus on that for now. Internal levels, internal ranges here. I don't want to short in this market at the moment. I want to just focus on longs. Routine is important. It protects financial and mental capital. Yeah, that is true. I don't know about financial, but mental capital is definitely important. Yeah. Gym subscription is expensive these days, guys. Gym subscription is expensive these days. But it's definitely needed. Like, if you're, I say this all the time, right? If outside of trading, you have issues with discipline, with impatience, psychology issues, mental issues, any pressure or stress outside of trading is going to reflect on the charts. The charts isn't forgiving. You're going to see the problems you have. So if you're unable to stay disciplined in any aspects of your life, right? If you're in the gym, if one day you decide to skip the gym, you want to sleep in and not be disciplined, it's going to show up on the charts eventually, right? Because you won't be disciplined enough to go to the gym, which means you won't be disciplined to sit on your hands and wait for a setup to actually show up. Yeah, mental protects the financial, yeah. I've had years of donating money back to Uzbekistan. It's time for that. It's time for them to give me money back. Is there any giveaways? I will check for you and we'll see. I'll get those giveaways sorted. See if I can, if there's anything. Oh, there is a giveaway. I forgot. There was a giveaway on the Discord, which we ran earlier. So make sure you join discord.gg/chartfanatics. Right, it's either in the description or is in chat. Just do !mark Discord and you get a link for future giveaways. I think that one might be closed now, but in the future we'll have the giveaways in the Discord, and we run them regularly. So if you don't want to miss out, join the Discord, people. Right, join the Discord. Use code CF20 for 25% off TradeZella. Don't forget that as well. Deep charts, code CF for 30% off. Market AI CF code 20%. Market AI code CF for 20% off. Apex Trader Funding 90% off code CF. And Holo Prime 20% off code CF. So those are the current discounts running at the moment with code CF. So make sure you use them. And of course, we'll give away regularly within the Discord community. But yeah, looks like we don't gain much for now. See what we had here. Yeah, no confirmation here anyway, if we was to go short. In the meantime, this was the trade we had. Let's see if there's any opportunities left. Yep, we'll be running a giveaway tomorrow. So make sure you join the Discord, people. Join up, join up. You're gonna be missing out. Yeah, hopefully this session was insightful for you guys, right? Good session just before NFP tomorrow. Trade safe, protect your capital. The last thing you want to do is donate everything back to the markets. You're better off giving me your money. Just kidding, that's a joke. Damn, I really need a new monitor. It's so dirty. Not dirty, it's just really bad. Let me try to sort this out. Which chart types do I prefer? Volume, range, volume, or minute? Do you also... I prefer 80. I prefer the range chart, especially when I'm trading order flow, because it removes the time aspect of it. But whatever happens on the range chart is going to happen on time frame anyway. The market is fractal. Same thing happens every single time. The range chart is just each candle from the... So I'm on the 80 range chart. 4 ticks is 1 point, so 80 ticks is 20 points. Each candle from the low to the high is approximately going to be 20 points. So it only closes once it is done that distance, which is why I prefer it. But it's the same. It happens. These strategies you could deploy on the time frame chart as well. It makes no difference. As long as you identify balanced ranges, imbalanced ranges, then that's all you need. Basic supply and demand. Do you also take journals for your trades? Yeah, of course. I don't journal as much as I used to, like before when I was just about to become profitable, and especially when I was starting out. I used to journal everything. So every single trade, took screenshots of everything, journaled everything, noted everything down. However, nowadays, I only build winning case studies. So if there's a trade that I took and is a winner and is a bit different to my usual trades or a new trade I'm not really used to, then I build a case study around that. And then, of course, I still track my P&L and everything and the trader's executions. But I don't really take screenshots of everything I want. I tried zooming in, but I can't. The ticker is NQ. NQ, guys. This is NQ. Let me... Let me make it in bright, bold for you guys. Trading NQ. NQ. Hold on, let me make this big. Okay, I don't know what those B's are. Hopefully you can see it now. Alright, so we're coming back up to this level. Let's look at what the M12 is doing. We have 1 minute till closure. Let's see how this M12 closes. If it closes bullish, then I wouldn't be looking for a rejection from this level. I would be looking for a break. But if it closes like this, then there's still a chance that we continue higher, get absorption, and then you could look for a rejection below. But it's going to be a low risk trade. I'm pretty much... We had the home runs today. We had a home run so far. There could be more opportunities, but let's see. How long are you using order flow? You mean how long have I been trading order flow? It should be around a year now. See what we get as we approach these levels. Yeah, should be around a year now. I was trading normal price action before that. Yeah. It did work. Price action does work. All right, I've done over 5 figures with price action with CFD prop firms, specifically funding pips and fivers. So price action does work, but I wanted to figure out why it worked. What is the best strategy to use on order flow? Honestly, there is no one size fits all. Again, there's no one best strategy. It all depends on you. Like, if you was the same guy that spoke about support and resistance, you can use support and resistance with order flow. Order flow isn't a strategy in itself. It's just a different way of viewing the market. All right, so this candle closes bullish. I'm not really looking for shorts here. Mechanically speaking, let's see. Yeah, there's no confirmation here for me anyway. Order flow kind of to confirm that a support level is actually being supported. Yeah, pretty much. Like, even with order flow, nothing changes. You still have levels of interest. You still have points of interest. You still have, you know, support resistance levels, supply and demand levels. The difference is, with order flow, you could see who's actually winning that battle. Before you get, like, with price action, by the time you get that confirmation, yeah, it has to break above here. And then, you know, you would have had to enter here with your stop loss below here. With order flow, from this alone, a lot of times, you could determine who is in control. And then you could have like a super tight entry and then continue higher, right? It's just added additional confluence. Yeah, like I said, right? Mechanically speaking, this would have been a nice setup, but off of this OBM high, 29650 levels, where we have passive protection, because these aggressive buyers didn't get rewarded, battle orders, sellers take back control. So this becomes a key level when price comes back into it. But we just didn't get a confirmation for me. And also, the M12 closed bullish. So I'm also favoring break and longs to the upside. Unless this candle closes bearish, then you could look for something like this to continue lower. But I think shorts are going to be not as high probability as longs at the moment. Let's get rid of this. I wanted to take a squeeze. Short deep chart shows an aggressive seller. Are you talking about this candle that shows the aggressive seller, or? What happens if CVD divergence? What do you follow, the price or the CVD, if question makes sense? CVD divergences are, it's a bit subjective. Like here, looking at this right now, when you have a lower high that gets created in price, even though CVD creates a higher high, that just means buyers were absorbed, right? Because they failed to break above this level, and passive sellers successfully protected that level, and that's why you're getting that move lower. So you could use that in that sense, but I always look for, you know, literal confirmation within the candle. CVD is just additional confluence for me. If this candle creates a higher high, if the price action creates a higher high, whereas CVD creates a lower high, that means the aggressive buying demand wasn't as high as previously. So you would expect for buyers to get exhausted and there's a potential for reversal there. Aggressive buyers and aggressive sellers move the market. That is what truly moves the market. I took that break of structure thinking it would recover. Or which one? Break of structure to go short, or? I was missing aggressive buying. Like, you see how you have this large aggressive buying here? It happened within this candle. In my, like, I personally think, not think, but I personally see this as aggressive buyers still got reward here, right? Price still moved higher. They didn't really, you know, they're not really trapped until this happens, right? So there wasn't a literal confirmation for me. I ideally wanted to see aggressive buyer within the upper wick of this candle. I'm really precise with my entries. Yeah, and there's also overall structure being bullish as well. I'm not favoring for shorts at the moment. That's why I said, mechanically speaking, is a good setup. Market intuition, it's not something I want to really take. Long. It's actually a range, and very high break contains a lot of low transacted. If they take the 10:22 AM candle high, given a good to 850s. Value error high. Which value error high are you speaking about? Let me see. I mean, unless you have different value error high levels, there's no value error high here for me. All of these are just value error lows. How you see high volume nodes and low volume node area to take trade, or just area where price moves fast or slow? Yeah, that's easy. Let's say you have this, right? If the market is currently somewhere around here, you have a low volume node here. I would look for a rejection here off of the low volume node. If I'm only trading volume profile, that is where I would look for rejection. However, if we break below, retest, then I could look to go short and target the high volume node. Because when price comes into the high volume node, I'm not looking for a rejection, or I'm not looking for a break and retest. The reason being is because high volume node is a level where the most transactions were facilitated. Both buyers and sellers were satisfied at this level. So you're going to get a two-sided price action. It's not going to be one-sided price action here. Hence why it becomes extremely low probability to look for one-sided direction. That's how I would trade it. $700 is a good gamma exposure levels. Let me check. Let me check. Let's clear this for now. Yeah. I mean, the next positive gamma exposure level is at 29755 from what I'm seeing. Not much at 29700s. It's still negative gamma exposure levels. Okay, makes sense. So it's because the buyers were on the previous candle, not the weight candle. Yeah. Like, you can see, like, these levels I marked, they still work well. There's a reason why they work well. I just want to see actual confirmation. You know, I want to be consistent with it. If I'm going to short every time price comes into a range high, or long every time price comes into a range low, nothing is really consistent apart from the levels. And that isn't good for me because I'm unable to data collect on that. I'm unable to test my edge. So do I use composite profile for high volume node or low, or do you use daily volume? I use dynamic profiles when I'm scalping. I do take note of, you know, in terms of narrative at the start. If you watch the start of the stream, I do take note of the daily volume profiles to look for low volume nodes, to look for high volume nodes. Whoa, this is broken. Let's wait for that to load. I do look at the daily volume profile, and this is from market open to market close. It's not regular trading hours, to build a narrative to see where value area and where we have low volume nodes and high volume nodes for my narrative. But when I'm like scalping on the immediate time frame, within the immediate range, I just use the dynamic volume profile. Right. So I don't know where my dynamic volume profile went, but I mark it from market open to 9:30, and then another one from 9:30 to, the future. Mentor Q shows GX1. No. Yeah, I think different platforms are going to have different data. Took 90% off, too choppy for me, plus I'm no expert. I mean, was he long or short? Guessing he was long. On prop firms, do you use micro? Do you use fixed? Do you have fixed stop loss amount? I have two different types of stop loss amounts, but it will either fluctuate between 20 points or 30 points. If it's 30 points, then I use 7 minis. I mean, not 7 minis. Jeez. So 7 micros. That's around $400 worth of risk. And then if it's 20 points, then I use 1 mini. So that is, again, $400 of risk. I don't understand the question when people ask, like, a lot of beginners, they make the mistake of asking, how many minis do you trade? That is the wrong question to ask. The minis should be dependent on your stop loss size. A lot of you are going to have a dynamic stop loss size, right? So trading a fixed mini doesn't make sense. You have to account for the stop loss size and for the mini amount that you decide to trade. Right, so it's not one answer. Yeah, it's not one answer. Like if I decide to have my stop loss at 40 points, then I'm going to trade with five micros rather than 1 mini or 7 micros. Right? Because I still want to risk a fixed dollar amount, not a fixed mini or a fixed micro amount, not a fixed contract amount. Can you take profile from yesterday's 3 p.m. New York time to current, including EETH as well? You can. Dynamic profile is subjective. I personally take it from 6 p.m. New York time. What are your odds of success on UMP? UMP? What do you mean? You think NQ will make higher high? Right now, I think because we've had this expansion high already, price is going to most likely just consolidate. Right? Because the market can't expand forever. Right? Once it expands, it always has to find some sort of a consolidation. And this is where you get your acceptance in price. And then whatever happens after will determine your next move. Right? If it comes up higher and we start to find acceptance again with another balanced range on top, then your narrative is bullish. Currently right now, it does look bullish, yeah. Like you have large bands higher, you have this range, you have this range, and then you're starting to form a bigger range. But these ranges are consistently going higher. Except for NQ 2 days ago, whenever I guess it went. Yeah, I mean, during these conditions, AI boom, tech boom, unprofitable startup, SpaceX, Trump, NQ could do anything. What's the right way to use CVD divergence based on up or down trend? Should we look on top or bottom? It depends, right? Like if the market is consistently making higher highs, but CVD makes a lower high, then buyers are likely going to get exhausted. Right? I mean, buyers are exhausted, and you could anticipate for a potential reversal once you get confirmation. Of course, don't act straight away off of buying exhaustion. You always want confirmation. The reason being is because cumulative volume delta difference between aggressive buyers and aggressive sellers. If aggressive buyers are unable to create a higher high with cumulative volume delta, then aggressive sellers are clearly more in control. Aggressive participants, they move the market. So in an up move, if aggressive buyers are starting to fade out, the demand for higher prices is going to start to fade. And this is where you get your buying exhaustion, and this is where you get a potential reversal to the downside, right? If you get, in that instance, I don't look for the bottom, I look for the highs. If you get downtrend now, and then CVD creates a higher high, right? Higher high, lower high here, then it's the same thing, but selling exhaustion. And then there's like 2 more scenarios. Let me try to think. We make a if price makes a higher high and CFD creates a lower low, then that could also be absorption from aggressive sellers as well. Right, so it's a bit, you have to like map out all the scenarios to get your head around it. That's why you need confirmation all the time. What is my criteria to take a breakout trade? Break and retest. Break above, retest. I want to see aggressive sellers step in. They get absorbed, go long. Simple. Same thing on the downside. Right, I always want to see the opposing side try to step back in and bring you back inside the range. The whole reason of those ranges is it's fair value. So when you break above the range high or the range low, the opposing side will always try to step back in to keep the market within fair value. That is where the market is most optimal. Break off the range high or break off the range low. And then retest off the range high or range low. But it doesn't always have to be completely above, completely into the range high. It could also just be a minor retracement like that. And then I could look to go long. I just want to see that retest. I want to see that little retracement that shows aggressive sellers taking back control and are able to move price. I'm no longer interested in using this internal level anymore. I'm going to shift it down to this low and use this as an external low, external high. Do I look at footprint? Yeah, I don't look at yeah, my big orders are here, my big trades are here. Speed of tape I don't look at. I do look at footprint though. So delta clusters and delta profiles. On current 80 range chart, there's CFD divergence at the top. How do you see that? Yeah, so as explained previously, higher high, lower low. That means aggressive buyers here were absorbed. Especially after you get this follow through, which confirms it. Is that a bull flag on 1 minute NQ? Well, I don't trade patterns, so but I'm guessing a bull flag is just like a P shape. Then that'll be a bullish confluence, yeah. The reason why that works, by the way, actually, let me search out let me jog my memory what a bull flag is. Yeah, it's just a P shape. Yeah, the reason why bull flags works, when you look at it from a balance and imbalance range perspective, you have imbalance here, buyers get more aggressive, and then you start to consolidate. This consolidation is extremely important because that means both buyers and sellers are finding satisfaction at this level, and it is offering fair value. So when you have this, right, there's a good chance that we're going to continue higher because they're finding acceptance at a higher price. But yeah, it just looks like we're probably going to consolidate here. But yeah, solid trades today, guys. Solid trades. Any more questions? Anyone have any more questions? Gonna wrap it up soon for the next host. We'll wrap it up in about 5 minutes. Hope you guys enjoyed the stream. You know, I hope you guys found it helpful and insightful. Like I said, I will hopefully be streaming weekly on Chart Fanatics. Game for the trade, stay for the education. Very nice to hear. Very nice to hear. Hopefully when you make money, you could spare me some change, eh? No, I'm joking. Do you consider breakout of last low high of whole range? Yes, I do. Thank you guys. Thank you. I appreciate the kind words. I don't consider myself a mentor, you know. I'm just a kid who trades. I will have big cake with surprise sent to your house. It's been awesome once again. Thanks for the intro on your style trading. I appreciate it, guys. But yeah, view me as a friend. I'm literally just a kid who trades. Just here to tell you what I think. 45-year 45-year-old kid. Do live streams every day. We'll have to see. Deep charts is good, guys. Deep charts is good. If you use code CF, you get 30% off. Deep charts is good. I just personally stick with extra charts because it's personal preference. Right, I've used this for a lot of months now. I know the ins and out. I'd rather have a platform that I'm used to a lot, so I could show you guys good trades, give you guys actual good insights, then use a platform that I'm unfamiliar with. But I am open to trying out deep charts as well. Because it's just order flow is the same thing across every platform. Yeah, the stream is great. Loved it. Appreciate it. Mick Elliottson. Very good explanation. Thank you. Cheers, Nemax. We will give you love for the streams. Appreciate it, lads. Deep charts got best big trade detection on the tape, like reaction on those big orders. Yeah, I mean, I haven't tested it myself. Obviously, I'm sure they do. Like, deep charts is good. There's nothing bad about deep charts. Like I said, it's just personal preference. It's always nice, even just listening to you on the background. I do appreciate it. I can sing for you guys if you want, you know, rather than listen to music. No, I'm joking. I don't sing. Very good explanation. Thank you. Yep. Appreciate it. Amazing stream. Cheers, guys. Cheers, cheers. Yeah, great stream today. I try my best. Which prop am I currently trading with using? These order flows. Lucid, Apex, funded next futures. Going to look to trade Top Step and Tradify as well. And yeah. Alright, guys. So I think I'm going to start wrapping it up here. I hope you guys enjoyed the stream. And yeah, take care, and I'll see you whenever. Hopefully next week. Bye-bye, guys.
Yo, yo, yo. What is going on, ladies and gentlemen? Hope you guys are all doing well. I feel like I always tune into these streams at like the most random time. I literally logged in and I saw Hugh basically saying he was going to start singing for everyone. So I'm not really sure how he set the bar and left this for me here today. But we'll see where we go on today's session. How's everybody doing? Anyone made money today? Lost money today? Are we laughing, crying on the stream? What are we doing? What's the vibe? What's up, Sherry? What's up, Michaelisam? What up, Eric, my bold brother? How you doing, my friend? This is a pro dancer stream. I mean, I think I'm in the wrong place. I'm not sure I'm equipped with these sort of skills. Mr. Endy says you have to sing. Bro, we don't want this. We're going to have everybody log off. I'm going to get reported for like offensive content. Nobody wants to hear me sing. Trust me on this one. Trench 3.6R today. Awesome. Awesome stuff. Eric minus 500. Eric, I think we're in flow this week. I'm slightly down. I had my dollar Canadian loss yesterday. I think I showed you guys. Otherwise, I've been flat. There's nothing else really going on. What's up, Mr. Andy? Crystal the Trader long 1 to 2. Nice. Soren break even once more. Up about 1K long in NQ still. Nice. In a trade, clenching my ass. Oh boy. Hello, Sanj. What's up? Shitali? I hope I'm pronouncing that correctly. Shietali? I'm sorry, I'm terrible with names. Giorgio, 9R on the day. God damn. Giorgio, I think we need to get you on stream, my friend. Eric, morning, my bold bro. Sings like a cat playing the violin. Yeah, I mean, that's one way to put it. For sure. For sure. Right, we are going to jump onto the charts very, very shortly. As usual, we're going to do a little bit of a recap as to how the day has been. I'm with you guys for the next hour. So it should give us enough time to unpack how things have been, look at some of the calls that we made yesterday, see where things have ended up, and potentially have a look to see if there is anything of interest going on today that we could actually take advantage of. I have a few, I don't know, teaching points, lessons that I think I would love to share as well. Some kind of nuggets of wisdom to sprinkle in throughout. I got asked some interesting questions earlier this morning on a coaching call, and I think they would make for some interesting lessons to share. So we'll unpack everything that has been going on. As always, would love to keep these as interactive as possible. So if you guys are maybe in any trades at the moment, if you want me to analyze any markets live on the call, or if you just have some questions, if you're struggling, if you're stuck, if you want to celebrate something together, throw it in the chat. We will. I'll be keeping an eye on that throughout the course of today's session, and we will see. We'll see how much we can get through in the space of the next hour or so. Merlo Leandro, my Spanish, I presume that is terrible. I wish I could, you know, Spanish is actually the one language I've been really wanting to learn. I think it's Spanish. But yeah, I'm afraid I'm not going to be much, not going to be able to communicate much, I'm afraid, in Spanish. Carla says, missed my take profit by 3 points. God damn. What market was that, Carla? Sherry, I'm short cable. Euro, dollar, I'm in a sell. How do you see this pair? Let's jump into it. Let's bring up the charts and let's have a look at how things are looking. Let's actually start diving into what has been going on. We'll come back to this. Aussie Canadian, I know we've definitely got at least one of you. I think it was Sherry. Sherry, was it you that was on the stream that was trading Aussie Canadian? I think I said it was McKellitsum yesterday, and I don't think it was. We'll come back to this. Let's start off with the markets that you guys are actively in. Have a look at what is currently going on. So we had Carla in NQ, right? Let me start writing these down. So I need to go through cable, euro, NQ. I think that was it so far. Vila, Merlo, my Spanish is terrible, my friend. I'm presuming it's Spanish. There was a company that made a whole language with mnemonics for easy memory. Interesting. 29,680 profit from previous day's lows. I'm sure Aussie as well. Okay. All right. Let's start diving into some of these. Let's have a look. So let's start off with cable. Outlooks on this as we stand. I mean, very, very lackluster week so far, right? From Friday's close, we are down 11 pips. So, I mean, if that's not a reference to how dry the markets are, at least FX at the moment, how dry the markets are right now. Clearly, I think the market is waiting for NFP. That's kind of my anticipation anyway. And it's why I haven't been super active this week. I've just seen very little actually going on. If I was going to do anything based off the current position of the market, based on yesterday's daily close, I think I would probably want to be short cable rather than anything. If we drop down to a lower time frame, I mean, it's very sideways. I wouldn't really say it's like my favorite market conditions at the moment. But definitely some presentable opportunities here. You can see some of the rejection happening kind of in this area, this overlap between this daily and weekly area that I have drawn up. Definitely some overlap in here. But like I said, it's just I just don't really like getting involved when the markets are relatively flat. I want to see the markets moving, reversing, faking out highs, lows, taking liquidity, whatever it is that you however you kind of think about it. I mean, I'm not opposed to the shorts in cable. It's just not my favorite sort of setup. But I mean, if you've got an entry model in there, if you've got something with that's showing you some downside action, I see it. From the daily perspective, like I said, gun to my head, I would probably want to be short rather than long. I just don't really feel like I personally have an entry on there, but I see why you would want it. I'm short Aussie as well. Let's have a look. So let's start with a daily perspective. Yeah, you know what? Aussie is an interesting one for me. If I'm completely honest, I think with Aussie specifically, I would kind of want to be long rather than short. And I'll tell you my rationale behind this. Yeah, I don't mean to screw with people's mentality around bias. Sherry, I'm sure I'm not going to talk you out of your trade anyway. And I don't even know if my long would work. I'm just putting this out there, right? I'm taking this based on what the chart is looking like at the moment. I think we're stuck. I wouldn't say we're stuck. We've started to break out very slightly to the upside here in Aussie, but we have this kind of new daily range presented, which after we rejected the high could present an opportunity to pick things up off the lows, right? So what I would be looking at here in this lower end range, I would draw this up as something that looks like this for our daily range. I would want to see if there is an opportunity to get long from this daily range and low. So from a 5-minute perspective, I would be wanting to see a break, like a structural shift to the upside from here, which from what I'm looking at, we haven't really had yet, right? So if I was to map this back, I would be looking at probably this area as my first point of interest, right? And it would look something like this. And I would want to see a break of this before actually getting long. I don't think, yeah, see this candle here didn't really clear this high. So I wouldn't have had an entry on that occasion. And then we came down and we punched and we created some fresh lows, which now creates my point of interest to this area in here. And that would be the point where I would say from the range, like the daily range perspective, I would consider longs, but from an intraday perspective, right? Intraday longs above here. We'll just get this marked up. So again, we could track this back, continue training that eye, see how things are actually panning out here. But this would be the type of setup that I'm looking for. I personally like this long rather than short. Yeah, I don't know. Just my eye. Again, not screwing with your analysis by any means, but overall, I'm long as well, Aussie, but the bigger market profile tells us it's in a dealing range, so we went with lower risk. Fair. And you know what? That's always the best thing that you want to see, right? I love being able to have conversations about two opposing sides to the same market. And just like people, like you see a lot of people online, they have this mentality of, oh, this market is only bearish, and anyone that thinks it's bullish has no idea what they're doing, and people start doubting and questioning themselves, and it's just the wrong way to go about trading, man. But yeah, I mean, I look, short-term momentum definitely to the downside. I would just prefer to be long because I think it's in a little bit more alignment with what we're seeing here from a daily perspective. And like I said, we're kind of playing off this very short-term range. So I'm going to keep an eye on this, at least for the remainder of the stream. Could present us with a possible opportunity that we could take live. But yeah, we'll see what the markets are looking like and see where we go from there. Right, Aussie we've covered. Cable wasn't a lot to talk about, but we've been through. Let's have a look at Euro. I think somebody said that they were short Euro. Mr. Andy, Euro, I'm in a sell. How do you see this pair? So I would say off the top of my head, I'm probably a little bit more neutral on this pair, right? If I compare this to, for example, Aussie, and again, this is just my 2 cents in perspective on this. Aussie was actually able to clear last week's previous range and high from a weekly perspective, not by a huge margin by any means, but it was able to close to some fresh territory and hold some fresh areas of price, which for me makes me lean a little bit more bullish on this pair. But if you compare this to, for example, cable hasn't even punched higher prices on the week at all, and then relatively euro tried to squeeze fresh highs, but is failing to press above this, what is this, Monday's range end high. Haven't been able to clear it whatsoever. So I'm a little bit more neutral on this, just because I don't really feel like the market has done anything. This daily range is becoming less and less prominent in terms of a workable range. This is kind of what I'm looking at. And like from a daily perspective, just in terms of context, there's nothing clear that stands out to me as a screaming opportunity. Like all of this sort of price action in here, basically what we have done for the bulk of this week so far, this to me feels like the consolidation before we make a real move, probably from NFP. That's my suspicion. That's why, like I said, I haven't really been forcing anything after getting out of dollar Canadian. Again, I'll cover that. I'll go over the market again and see what we've done today. There hasn't been anything that screamed at me. And on a week like NFP week, first week of the month, that leads me to be a little bit more cautious. And if anything, on today's daily closes, I'll be having a scan through the market, and I will probably, if there's a potential opportunity, I'll probably leave an order in to see if I can get filled over NFP. And again, I'm saying this purely on the basis that I'm a swing trader. I'll have fairly wider stops to weather any volatility at the time. And that's something that you want to be considering. For a lot of short-term intraday traders, especially if you're playing prop firms, you may not be able to trade the news at all. You may obviously want to be a little bit more cautious if you're planning on using tighter stops. Like these are moments that you want to avoid. But if you're a swing trader, if you've got relatively wider stops, smaller position sizes, then these sorts of moments, they could be used as times where you could be getting where the market is, manipulating, as some people will call it, a variety of different things. But definitely some scope to think about. But yeah, I don't really feel like I have a read or an idea of what euro is trying to do here. It just seems stuck in a little bit of slop. Yeah, I don't know. There's just nothing that super excites me about this as we stand. I think NFP is going to be the play here. There's a nice area of supply in here. If we were thinking about creating a sort of short-term sweep above these highs into an area of supply, that could maybe present something for NFP. But again, I don't know. I'm just gonna wait and see. So yeah, unfortunately, not too much of a solid read on euro as we stand. Last one that got mentioned was, I think we had somebody that said, was it Carla? I think a couple of you guys mentioned, oh no, Carla, long NQ. Let's have a look. Let us have a look. Now, again, we've only really been looking at some of the equity markets from a higher time frame perspective. Haven't been looking too much from an intraday standpoint. And again, I'm using a delayed chart as well, so please factor this into where we are. But one thing I have been talking about all week is the possibility to see some mean reversion going into the end of the week. NFP obviously may be the wild card and something that changes that. But you look at least the reaction so far, we have started to have that pullback within the range. And a lot of that was based on just purely statistically, we have exceeded our average weekly range. And typically what you tend to find either at those points, it's going to be one of the low probability weeks that continues creating that expansion and you see a big trending week. Or you tend to get the, either the test or the small extension of the average weekly range. And then you look for mean reversion back within to the range. And statistically speaking, you tend to get more mean reversion than anything else. We tend to get price either remaining within the boundaries entirely, or if we do squeeze outside, we tend to get that pullback, towards the end of the week, which is what I suspect we may get. If it was a standard week, I'd feel a lot more, I'd have a lot more conviction behind that idea. But given it's NFP week, if NFP decides to throw in a curveball, maybe we'll see a little bit more volatility off the back of this. Really nice test of just some short-term area of demand in here, it looks like. I would probably have it a little bit lower down, if I'm completely honest. But I mean, if you're an order block trader, maybe that's something that would have interested you in there, which is maybe where you got your long idea from. Again, I don't know. Right. So I've missed half of this chat, evidently. Let me catch up 1 second. That's why I took a daily short on Euro. I took the bull flag on NQ. Looked at QQQ. It tracks NG with no delay. Yeah, you know what? There's a bunch of CFD firms that will show this as well. I personally I haven't day traded any equities. Maybe something that I start exploring. I'm very interested in getting involved in futures. So maybe something that I start looking into a little bit, because I know, at least from a short-term perspective, it probably makes more sense to be involved in futures rather than CFDs. That's why we have a stop loss, all probability. Of course, the game is the game. That's why I took the daily shorts on Euro. Yeah, I mean, fair. You know, like I said, each to their own. It'll be interesting to see what these markets want to do. Pressing lower as we speak. That momentum to the downside definitely playing ball here. I think, was it Sherry? Short Euro and cable, was it, I believe? Seemingly doing well at the moment, which is always nice to see. I took the bull flag on NQ. I'm waiting for a liquidity sweep in Aussie above the high. Might sweep short for a counter trade, short for a short period, looking good. Let's see. Yeah, I mean, fair. Like I said, continuing with the current line of momentum, I would, if it was me personally, I would probably want the long. But again, it's just not in my plan to be selling in this area. But I mean, look, the market is dropping as we speak. So yeah, I think that idea makes sense. Michaelisum says we have the second batch of SpaceX shares today. How do you think that will impact NQ? I don't know. I don't know if we're going to have a huge impact, primarily because I think last I saw, SpaceX doesn't make up a huge proportion of NQ, I think. I could be getting that wrong. But yeah, I spoke about SpaceX yesterday. We talked about this idea of the shares becoming available today. I don't know if they already are. I don't know if they were available to be sold from market open, or if there's like a specific time where it happens. Maybe I should Google this. SpaceX, what time shares can be sold? Let's have a look if AI can help us out here. I don't know. I'm not sure. So Elon Musk has his, well, Elon Musk and, so this is what I'm reading, right? Elon Musk and significant investors of SpaceX have a 366-day lockup from, I believe, the day of IPO. So June 2026, initial IPO floated, late July. So Elon Musk controls 85.1% of the company's voting power. Let me switch you guys over to the screen I'm looking at. 1 second. This is, by the way, I have no affiliation with this site. I don't know what this is. I'm just Googling. But yeah, Elon Musk and significant investors, 366-day lockup. Elon Musk, who controls 85% of the company's voting power, along with undisclosed institutional block holders, signed a strict 366-day calendar lockup. So that could be like very, very interesting. Whether he chooses to sell up after the 1 year mark could be interesting, right? 13th of June, 2027 is going to be a day for the calendars, because I think if he decides to cash in a little bit, that could be very, very interesting. They provided liquidity for the first sellers. Evidently, they had, I think it's this one. This is the one that's happening at the moment. Pre-IPO institutional backers and early VCs, performance tied tranches. So they can unlock 20% of their holdings on the second full trading day following SpaceX Q2 2026 earnings scheduled for late July or early August. And that was the one that I believe happened yesterday. Sorry, not yesterday, today. Wait, the earnings came out on the 4th, but I believe this block opens up today. The multiplier there granted a bonus 10% unlock if the stock trades 30% or more above its initial $135 IPO price for 5 out of 10 consecutive trading days prior to the earnings report. I mean, based on what this chart is looking like, it's not looking good, bruv. To quote, I don't know if anybody knows Castillo, but yeah, I mean, it's not looking great. 10 days prior to IPO. Sorry, not 10 days, 10 days prior to earnings. So that was 4th of August, they had earnings come out. And yeah, we've been tied back for a little while. So I'm not sure they're getting that bonus, at least as we stand. They're not getting the 10% unlock bonus if the stock trades more than 30% or more above. That's not happening. The group comprises of the company's engineers, technicians, and executives who hold a vested restricted stock units. The IPO has already created 4,400 employee millionaires on paper. Crazy, man. To mitigate the impact of a sudden mass sell-off, employee equity unlocks in regular 7% increments. These releases occur precisely 70, 90, 105, 120, and 135 calendar days following the June 12th launch. An additional 28% unlocks immediately following Q3 2026 earnings, with all remaining restrictions completely lifting on the 180-day mark, December 8th. See, that's going to be a very, very interesting day as well, right? So December 8th and June 13th, 2027. Those are going to be very interesting days to watch. This is where we're at the moment. Late July, early August, the tradable float is projected to double as the first 20 to 30% private tranche unlocks post Q2 earnings. Yeah, so it'll be very interesting. It's gonna be one to watch. We talked about SpaceX literally yesterday. So I think what happens with this is gonna be super interesting. The Castillo line. Somebody else knows Castillo at least. But yeah, I mean, like I said, it's not looking good. Sleeping Dolphin feels like socialism for the super rich buyers. Yeah, it's pretty wild. It's a crazy time. But like I said, and I stand firm on this, I do want to start picking up SpaceX at some point. I just don't know if it's dumped enough for my liking yet. I think we're in for a little bit more pain. But yeah, I don't know. It'll be interesting. Let's have a look. See, according to what I can see, SpaceX makes up approximately 1 to 3.5% of NQ, right? So I don't know. I don't know if we're going to see a huge shift in NQ because of what happens to SpaceX. We may see something, I don't know, but a 1 to 3.5% potential like weighting, I just don't know if we're going to get anything big off the back of this. I wouldn't be surprised if SpaceX dumps a bit more. That's what I think. I think we've got, I think people would want to cash out. It depends on where they're priced in, right? The early investors, the people that got in pre-IPO, it depends what price they've got, if they're actually going to be holding a profit. I'm not sure. I have no idea, but I suspect we've got moved to the downside. That's why I haven't started buying yet. Like when it comes to long-term investments, I don't specifically look for like a specific price to be involved in. I'm happy to average in over time. But I haven't started any sort of averaging in as we stand. I think if this starts to dump a little bit more, maybe I'll start like buying stuff up weekly. That's what I do with a lot of other stocks in my portfolio. Like I just buy every week, regardless of where price is. I don't really care. And I just look to hold for the long haul. It just keeps me out of overthinking it. I think otherwise a lot of people are like, oh, you know, I'm going to buy at this price level and then it never happens. And you end up missing the boat. So yeah, I have some things that I'm sitting still in the Reddit. I started buying in a little bit too early, but I don't care. I keep buying every week. And we see what happens. Some things have already reversed. I'll buy it super cheap. SpaceX has a lot of patents not yet used, in my opinion. Like I said, I do like it long term, and I think Elon Musk, love him or hate him, he's a good business owner. He knows how to run a business. So I buy into it more so for the long term vision and the person that's running it, rather than even just the company itself. But I do think the company will do well in the long run. I'm definitely marking out the December date because I'm curious to see how I might capture a move that day. Yeah, fair. Could make for some interesting option plays. How come it's possible to log into Chart Academy, but after I've been told I now have access, reset of the password doesn't work, never get a reply? Rock, I can pass the feedback on to the team. But everything should be up and operational. Right, let's have a quick flick through, see what else is on the card. So I think before we moved on to SpaceX, we covered very briefly, we looked at NQ. I mentioned obviously the wild card is going to be NFP, but gun to my head, I like the idea of just price remaining within this threshold. And it's primarily because of, like I said, this average weekly range. Should we get a big surprise on NFP this week, maybe we'll see some expansion out. But otherwise, I envision that price like up here is probably going to be the kind of cap on price this week. But we'll see. Again, it's purely from a statistical perspective. We'll wait and see what the market has in store for us. Right, let's start flicking through the rest of the watch list and see what price has done since we last checked in yesterday. So starting with Aussie Canadian, we have been watching this. I noted this level yesterday to kind of watch a reaction from this level. And I said, if we don't hold these highs, it's very likely we will see this unwind lower. And I mean, we've had an absolute perfect retest of that high today and then some expansion to the downside. If I drop this to an hourly chart, you can see what this is looking like in here. That was the test. So, you know, if you're a levels trader, if you're someone that works reactions off of key levels, great place to build a little bit of a short position. And then you've got this nice little area of demand in here, could make for a decent exit. If you look at average daily range, we've still got room to the downside, to be honest. But yeah, I as long as we now remain below this high in here, I favor at least short-term momentum to the downside. What comes of that, to be seen. I don't know if today was the extent of the move and now we'll get some traction to the upside. I would base it personally based on the daily close, but we'll wait and see. It'll be interesting to watch what happens here. Aussie, we looked at, again, I think short term, I was looking at potential longs, but only from that area of interest. See, we've punched fresh lows in here, which now if I was going to get long, I would still probably favor this same area. Structurally, I think breaking this area in here makes sense. But what I would love to see if I was going to take the long is if we can not only break a structural area, but also the top end of this daily range. You know, if we can clear both of those and then start moving into this relatively like empty space, I think then the rotation to the upside becomes a lot more favorable. So I'd be looking at something that looks more like this as a potential play. And again, not crazy risk to reward, but I think something that would be relatively high probability. Note that like all of these plays that I have, many of them just don't end up getting triggered. They're very much like if then type of setups. If this happens, then I want to do this. If it doesn't happen, I sit on my hands and I wait and I be patient. But that kind of setup looks high probability to me. That is kind of what I would favor. And if we continue dumping, we dump. And I just observe the market for the day. But that's where I'm at kind of with Aussie. Euro, like I said, I don't really have a play or a read on at the moment. We're very much just sidelines, waiting for the market to tip its hand is probably the best way to put this. I will say, if we get a daily close, anything like we are looking now, that would give me more of a bearish vibe, right? We've got this kind of failed press to the upside, still being capped by this weekly range. And then we get this momentum shift where the last bullish candle that attempted that upside move, if we can get a daily close below that, I would favor some downward momentum going into NFP. But again, to be seen. I don't feel like I have enough to warrant a trade today, but the context, if we get that close below that daily low, the context would be set then for tomorrow, and maybe we get a trigger before, during, after NFP, something like that, and we go from there. Let's have a look. GJ, I think we had something mapped out here. So, yesterday when we spoke, we mapped out an area for swing shorts if we were going to be conservative, which we didn't have. We had no fill in that. So again, a little bit of an if then when for a short scenario. But what we do have here, and again, it's not my favorite play. I think the dollar yen position was looking a little bit cleaner. But something that looks like that makes sense to me as a potential play, right? We started to break some structural highs. We're also clearing out, I think this was the low end of the monthly range. So longs above here, targeting the upper end of the range. Again, from a purely technical perspective, makes sense. Would I take the risk with Bank of Japan doing the things that they're doing? Personally, not. And to be honest, like I said, I think dollar yen makes for a little bit more of a sensible play here. But yeah, like I said, it kind of ticks the boxes. I'll leave it up there, but for clarity and transparency, not a play that I think I would personally take going forward. So I'm not going to mark it up as a one with the risk to reward tool, but we'll watch and observe, train the eye, see how things go. Cable we covered. Again, gun to my head, looks more bearish rather than bullish, but I don't know if I would warrant a trade in this personally, but I see it for those of you that are long or short. Dollar Canadian. So you guys will know or recall from yesterday, I actually was long this, had a potential trade that went for a 1R loss, had a swing play that I was building an entry from initially in this area that I got tagged out for just under break even. But today you can see we've come down, we've retested this weekly range end low, literally failed the lows from earlier last week. And we are starting a rally to the upside. The play that we were looking at yesterday, we got another one of those no fills. We were looking at this in here, and I said intraday, if we get above that area, I would consider wanting to go long. But we never had a play. And again, it was an intraday perspective, so it gets pulled from today. If you were going into today looking for a bullish reaction after a sweep of those lows, I think there's definitely room to say that you would have got a potential fill in this area. Depending on how you wanted to have played this, again, I think super aggressive, you could have probably got in anywhere above here. And that kind of would have made a little bit of sense for me. But taking out a short-term area of structure. But again, in my eyes, that would have been a little bit more aggressive than I personally would have liked. But again, it gets you in alignment with a move back to the upside. But I think my personal play, my concern getting involved here would have been what happens in this lower end range, right? We already know it's a reactive area. We've seen how it's played out with price previously. I would be worried that if I was getting long coming into that, it would create for a little bit of resistance for the upside, which ruins a little bit of the probability of the play. And therefore, I would probably want a little bit more of a conservative break. So I would look for, personally, something that looks probably something a little more like this. And again, obviously, we could do this with a little bit of hindsight on our side. But that would be like the structural area that I would want to see a close through. So my fill would probably start happening somewhere in here. I probably like that candle a little bit more. It'd have a fairly wide stop. But then targets, again, you're looking for a complete rotation of the range here. So I would look for something that looks like that. So you got a 1 to 4R that you're kind of looking for here. So weekly rotation. That would definitely be a play that I would consider. But again, only if you had a bias to say, I still want to remain a buyer. And I think, you know, again, a sweep of that low in conjunction with the weekly range, and I see it. I see a potential play to the upside. So I'll leave this on to kind of see what happens here. Again, unfortunately, we're having to do these things in hindsight. I know the session timing not always optimal to be able to do that, but definitely ticks the boxes of an opportunity that we would look for here. Something that I will keep noted on the charts to see how that pans out over time. Dollar yen finally getting some traction here to the upside. This was one that we actually called a little bit earlier in the week. Let's take this up to an hourly chart so you can see the reference point here. So we actually had our fill a little bit earlier in the week in here. This was on Tuesday, during the London session in Tuesday, right? We had an entry signal, came down, found some support inside of this monthly lower end range, I believe this is, and then we've started to find some upward traction today. If I was in this trade, and this was a swing trade that I was looking to take, I would at least have trailed my stops to below that low. That would be what I would be potentially looking for as a trade. And then, yeah, getting some nice momentum to the upside. Again, I think personally speaking, the dynamic here is, I think technically speaking, you could make an argument to the upside. I just don't know if I like it from a fundamental standpoint, but it definitely ticks the boxes for a potential opportunity. Right, let's have a quick breeze through everything else that is on our list. ES, very similar to NQ, I believe. You know, we were looking at the same sort of like mean reversion trade. If you look at the weekly average weekly range here, you can see we've had a breach of that. And the play, or at least the most sensible play, would be once you've got some momentum to the downside, play the continuation for the mean reversion. So it'd be interesting again to see how this plays out, and see what happens off the back of this. Let me give a split view of my charts here. Probably give us a little bit of an easier breakdown. DAX, very similar sort of play. I think we mapped out here that we had. Oh no, DAX wasn't. We had room to the upside, but very much just following a lot of the US equities here, having that little bit of a pullback. Again, I think NFP might be the driver or the catalyst for a move a little bit later in the week, but we will see what happens. NQ, still getting that pullback, still watching to see how things go. Dow Jones really pulling back today. Had a lot of weakness here from a daily perspective to the upside. Average weekly range heavily exceeded. Again, I think the pullback, the mean reversion play definitely makes sense, especially once you got the kind of daily confirmation that we're getting a little bit of weakness into the market. A short play off the back of that, I definitely see as a pretty sensible play. Again, you've got the statistical factors overlining with a momentum shift in the market. I think makes sense for a potential pullback here. So yeah, definitely some potential scope in the Dow Jones going forward. Silver. We drew up this potential swing trade yesterday. And again, definitely one that I think I would still be within. I would love to see this type of move play out. And given the risk to reward, I would want to give it some breathing room to see how it would potentially work over time. What I would personally be watching in silver is how price now reacts to this old sort of area of highs in here. This would be something I'm watching. You've got kind of the confluence of old highs in here. You've got old highs in here. We made a good punch through those areas yesterday. I would love to see how price goes in reacting. I think if we can start getting a little bit of support, we can catch a bid from some buyers, you know, on a retest of that, could provide for a nice area to maybe look for longs. But I would want to see daily candle confirmation closure on that. Again, I think if we lose this level, it may start a little bit of an unwind, at least for this bullish leg up. So we see where we go. Gold, interesting. Definitely, we were talking about this yesterday briefly, and I mentioned like where we close based on this high is going to be very, very telling. So we'll see. We have obviously had the close outside of this. Whether we get the retest of this would be the kind of swing objective that we are looking for if we're looking for a rotation from the downside to the upside. In all honesty, I didn't see it. I wasn't looking for a rotation to the upside. This would be a move that if I was trading gold, I definitely would have missed. My read of the market was this is looking a little bit more bearish rather than bullish. I thought we may get a sweep on these lows before then a potential run back up, but we just didn't play ball. So I would be relatively flat here on gold, again, from a swing perspective, and see where we go. Let's have a quick look at Bitcoin. I think we had some short-term, we mentioned an intraday opportunity yesterday, which was shorts below here. As you can see, gave us no entry, comes off the chart today. Let's have a look with what we were looking at. From a daily perspective, getting a small sign of weakness coming into this upper end daily range in here. From a lower time frame, you can see starting to generate a lot of weakness. And again, we're starting to get that weakness coming in as we test it today. I would genuinely be open in some shorts here to see how this potentially plays out. We were looking for initially shorts yesterday after we were getting that weakness in, didn't present. I would definitely be open to some shorts again today. Where would I look to take them from? If I get rid of this conservative swing would probably still be on the cards for us today. I would probably bring this a little bit higher up. I would want to see this area start to fold. But from a shorter term perspective, to be honest, even from an intraday, I kind of like this same area. It gives us a little bit of breathing room. I don't know if we're going to get a fill on this, but that would probably be the area that I'm looking for. And again, it would look something like got short entries potentially in here, stops above the high, and then creating open leg to the downside. And again, not crazy risk to reward, 1.45R, but in my eyes, very probable, right? I think you're at least going to get some type of move to the downside, which will give you an opportunity to either minimize risk or just a very highly probable trade to the downside. So yeah, I don't know. We'll see what the market presents here, but that is probably what I would be looking for on Bitcoin. We will see how that potentially sets up. I'm going to have a quick scan through to see if there is anything short-term that's potentially setting up that we could talk about today itself. We'll stick with a lot of the majors. Aussie dollar, I think I mentioned this opportunity already. I would be waiting for that. From the looks of the chart, it does not look like we're going to get it today, especially since we have more room to the downside. I think I would be flat, relatively speaking, here on Aussie. Euro, don't know if I really have a play in this. Moving to the downside, though. Those of you that were short, I think it was Sherry mentioned Aussie I don't know if it was Euro. Somebody else mentioned maybe Euro shorts. Cable looks like we're pressing down a little bit as well. That momentum definitely on your guys' side for sure. Let's have a look. Dollar Canadian really going for it here. Let's have a look from a 5-minute. Yeah, really pressing those highs here. This one will be an interesting play because, you know, this like if this becomes the start of the rally, this is what I wanted to see over here. It would be very, very unfortunate to have been tapped out. But if today's daily candle closes how it is, I would probably leave an entry to get long into NFP. And we will see what we can get. And again, it will be a swing play. It will be something that kind of looks relatively like this. But it would be based on the same idea of a rotation from here back up to the weekly end range high. But I would want to see that daily candle give me some confirmation of that before I leave any order in. And we'll see where we go. I'm not actually with you guys tomorrow. But we'll obviously pick this up on Monday. And I'll recap if I do take any trades and stuff. I'll show you guys what I got into. And we can go from there. US, let's have a look at these from an intraday. US 500. Yeah, I mean, nothing that screams out at me. That sort of price action just would not be my favorite at all. German 30. Let's have a look. Yeah, I mean, again, from an intraday perspective, nothing that super screams out to me. US 100. Let's have a look at NASDAQ. Yeah, I mean, potentially, if you like order blocks, if that's part of your analysis, I definitely see why you would have potentially liked the long in there. I would have liked it a little bit further down, but it's just how I draw levels. You had the overlap of this old high in here as well, which is quite nice when you talk about building a little bit of confluence behind your trade. Old daily high coming into a order block, level of demand, you know, some contributing factors there. Silver and gold. I do definitely think this area is going to be very interesting in silver. You got this short-term area of demand in here as well. Very short-term, not one I would put a huge amount of weight on. But one to watch this level for a reaction. One to definitely keep eyes on for sure. Gold, what are we looking at? Nothing really. Nothing that really tickles my fancy here. Bitcoin, we've already mapped out. SpaceX, we're not doing a daily intraday perspective of. That's kind of it, to be honest, guys. There's not a huge amount going on in the markets as we currently stand. This could have been a potentially interesting opportunity. Again, if you were looking at this short-term area of demand for a potential long, definitely something in there to take at the end of the day. But my preference, like I said, would have been shorts. That, again, for me, like, the important part about taking a trade is not necessarily the entry model. It's the narrative and the context that is framed beforehand. I think before you have that type of stuff, you could find an entry model in anything, right? You want to have that narrative and context that's laid beforehand to give you some perspective on, you know, trading with some momentum or, you know, kind of order flow behind you a little bit. If this bull flag works on NQ, that would be a triple. Let's have a look. Yeah, I mean, fair. I see it. I definitely see it. Be interesting to see how it pans out. I think it's. I said it at the start of today. I really do think it's going to be all on NFP. We definitely have this tomorrow. Yeah. 8:30 Eastern time, it looks like. It does seem like the market is just gearing up and waiting for something. waiting for some type of catalyst. One thing I did want to mention, again, it's going to sound like not trading related, but honestly, I think it's completely trading related. I wanted to talk very briefly about an experience that I had last week. So end of last week, I went to the US for like a weekend getaway. And the flight that I was flying out on was 7 hours late, right? 7 hours late. We were supposed to take off at like 8 o'clock in the morning. We didn't end up leaving until like 3 o'clock or something later that day. Super, super delayed. And as you can imagine, there were a lot of people at the airport that were pissed off. They were annoyed that the flight was running as late as it was. We got advance notification that it was delayed like 4 hours initially. And then we got to the airport at the correct time. And then it was delayed like another 3 hours after that. And everyone was just complaining. There was one woman on this flight and she went in, like she was going off on the like the airline staff that was standing at the counter. Again, nothing to do with them, not their fault whatsoever. She's then calling up the airline to make a complaint, basically complaining about the flight's X amount delayed. I want compensation. They ended up giving her like $250 worth of compensation. And then she stood up in the airport and made this huge announcement to everyone on the flight that everyone should be entitled to this compensation. This is what we need to be looking at. This is who you need to contact. And this is how you get your money back. And again, I agree, like to a certain extent, if your flight has been delayed, if it's the airline's policy, you should be entitled to a certain level of compensation. But the reason why I bring this up and the reason why I think it's very correlated to everything that we do here, negativity is contagious, right? You hang around people like that for a long time, and honestly, you start becoming a very negative person. And I'm a big believer that whether it's life or whether it's trading in general, I think you gotta have an optimistic outlook on everything, right? You have to be the type of person that sees this as like the glass half full. You got to see the good in everything that you're experiencing. And I say this primarily because trading is hard. Trading will test you like nothing else that you have done in your life. And if you're not mentally prepared to deal with like the highs and lows that you will go through in this game, it will defeat you. You will want to quit. You will want to throw in the towel before you reach those breaking points that give you that progression to be where you want to be. And if you're not the type of person that can, work through these difficult times, it's just, you make this game infinitely harder for yourself. And a big part, I think, of being a positive person is you got to surround yourself with the right people. If everyone around you is always complaining, if everyone is always bringing you down, if everyone is always talking about the downsides of life and their job and, their friends and colleagues, it's such an energy drain. I'm a big believer of like leaning into good energy, spending time with people that are doing things positive, constantly moving forward. And it translates into every part of your life. You spend time with them outside of trading, and I promise you, like, it's going to be so much easier to spot the negative when you're in the markets. And that's what I think makes trading infinitely more difficult. Higher flight attendants that are 300 pounds of muscle and are ex-UFC fighters. Yeah, bro, I can promise you, people would not have had the same attitude if they were ex-UFC fighters instead of the two women that were standing there where they were. I don't know, man. It was just like an easy target to abuse. And I felt super sorry for them. Like, it clearly was not their fault that the flight was being delayed. And like a couple of people, they were just being so rude to them. And I'm just the type of person, like, it costs nothing to be nice. And, like I said, I'm a big energy guy. I just didn't think they deserved it. Obviously, it sucked that the flight was running late, but put it into perspective of like, what can you actually control? Because trust me, it's, no amount of complaining to them is going to change whether your day actually gets better. They're not going to suddenly snap their fingers and put you on the flight and get you to take off on time. It's happened. Like, it sucks. Yes, of course, I get people have stuff to do and things to go to, but if there's nothing you can do in that moment that's going to drastically change your current environment, you know, change that perspective, man. There was a quote that I heard many years ago that really stuck with me. And it basically was along the lines of, I would rather be the optimist that's wrong rather than the pessimist that's right. Right? Let me say that again. I would rather be the optimist that's wrong rather than the pessimist that's right. If you're going to have something crap that happens to you, right? You're better off being optimistic and being proven wrong, because at least in that moment you feel better about the situation because you're optimistic. You're looking at the bright side rather than being negative throughout and then having the negative thing happen. It just beats you down. There's no upside to doing it whatsoever. So yeah, I don't know, man. Just a personal thing, but I think there's a lesson in that for sure. Like, be careful who you surround yourself with. Be careful of the type of energy that you keep around you. People are complaining and not doing anything productive and trying to improve and get better. You know, it's going to be something that just weighs you down in every area of life. And that's the last thing that you really want, man. Michaela says, I had to cut out lots of people because of that. It's real for sure. 100%. And you know what? It's not always easy to cut people out. But I think if you're not going to cut people out, limit your energy with them. Like, there are a lot of people that I grew up with that are honestly the best people that you've ever known, right? I've got nothing against them personally, but I just found that our energy doesn't vibe. Like, we're chasing different things in life. And I think as long as you're happy, whatever you're doing, it doesn't matter what you do. But if the energy is not right, I feel like you kind of have to limit the amount of time that you give certain people. And again, it's nothing against them. I still spend time with certain people. I still engage. I still send messages and things like that. But if they're not aligned with the vision that I have for my life, if they're not always, you know, having the types of conversations that I feel like uplift me and make me a better person, it's not to say I'm right and they're wrong. It's just the energy doesn't align. And when that doesn't happen, I feel like you got to be responsible for protecting your energy. And that's a big part of this game. So, you know, take from that what you will. Yeah, Aussie, I mean, just continuing to dump. It would be definitely a no trade here for me. Like I said, my trigger definitely up in here. I think the only other thing that we were talking about, potentially Bitcoin. I don't know if we're going to get a fill, at least on stream. It's going to be one that we are waiting to see what happens. And again, I'll leave all the analysis on here. We'll have a peek in and see what happened probably on Monday. And we will go from there. Dollar yen still running. Dollar Canadian, meh. We'll see. I don't know. Like I said, I'm looking to leave some orders on over NFP. But it is all really going to be based on daily closes. I want to see context and narrative from a daily perspective, and then I'll leave an order in. If I get filled, I get filled. If I don't, I don't. There's no qualms, no issues whatsoever. Right. I think we're going to keep today's session a little bit shorter and sweeter. I am going to wind down and leave you guys here for the day. Apologies, there's not anything more exciting really happening in the markets. It sounds like you guys are all pretty much doing well, all found some opportunities for the day. These last like 48 hours for me have all just been about a little bit of patience, a little bit of sitting on your hands, waiting for the market to kind of tip its hand a little bit, show its cards, and show you, you know, potentially what's in store for the future. Thank you, Makeda-san. Appreciate that. I always appreciate you guys' presence. Always adds a little bit of energy and good conversations to the stream for the day. But yeah, as always, show the stream some love. Make sure you're subscribed if you're not already on the channel. We will leave it here for the day. Like I said, I think I am done here with you guys for the week. I'll be back with you guys on Monday. Very, very similar time. We actually may be changing things up going into next week. Keep your eyes peeled. Make sure you're in the Discord. Make sure you've got us on socials. We'll be putting out the schedule for next week. And maybe we'll be spicing things up for you guys. I have a friend like that. He's really funny about it. He's like, look at the dumbass with the cell phone in the flunking green light. Yeah, like I said, I just energy is very, very real, man. You got to spend it with the right people. And I'm glad you guys are all on the same wavelength. At least it makes our time on stream together a little bit gives us a little bit of that closer connection. Right. Okay. That is a wrap for today. Thank you guys for tuning in. Little bit of an end of day recap. Quiet time in the market. It's clearly waiting for some type of catalyst, very likely to be NFP tomorrow. So keep your eyes peeled for that. Stay disciplined if there is a little bit of an explosion with volatility. Again, always good for opportunities, but you got to make sure you don't do your ass on those days. Hope you guys have a great weekend, and I will speak to you next week. Take care, my friends.